Tesla Inc. is sparking concerns around job security.
This is not financial advice, silly.
Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. Turned up to work and went to start my day. Was barely late, like 9:08. So took my coffee break. Then I got hungry, so I just stopped by the free buffet. But then to my dismay, I heard somebody say, "Attention humans, you have lost, you have not met your quota. Pack your belongings in a box, now it's over." Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. But I'm in management. I work hard every day. I need these benefits, health and 401k. How could they do this shit though? Where will I trade my crypto? I had a second monitor for Twitter, where will it go? Somebody please stop the bus, I mean not the fuss, but there's lots of us. And now you say you won't pay me to play ping pong because Optimus. I mean who employs an end humanoid? Some new droid for you to exploit, deploy to destroy your human droid. No lunch breaks, great, get a few deployed. Your time is up, human inferior to me. I'll take it from here, you're relieved of your duty. Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. It's okay, human, please don't cry. You can always go and become a Twitter thread guy. Make pretty pictures with Midjourney on your new PC. Or make some YouTube videos about ChatGPT. Sucker. Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. I mean, I didn't even write these songs. I just used ChatGPT because it's way easier. Holy shit. We are so doomed. Robot just stole my job. Robot just stole my job.
All right. Hopefully everybody can hear me. Today's going to be a fun day. I'm super excited. It's either going to be a train wreck or it's going to be a thing of beauty. Earnings should be coming out real quick here. Conference call is in an hour and a half for Tesla. We will cover macro-related stuff here in a second, but we're going to be trying to refresh to see if we can get the latest data. If anybody gets earnings related information before I do, please let me know. I guess we could just watch the ticker, huh? I got the ticker on the left side. We can see if that gets crazy. If that goes crazy in one direction or another, we will know. So I'll get back to that. All right, today, another six-figure day, which is nice. It's headed in the right direction. I appreciate that. But let's see what did well today. We had Clean Spark. That was amazing. Cypher did really well. Everything did. I mean, everything did. Look at these percentage gains. Flux up 6.17%. Clean Spark up 8.46. Little bit of a retracement in the after part of the day, but still. Tyler, first earnings call. You're gonna love it, man. It's fun. It's not as fun as like a release when they're releasing new products. That's kick ass. But it'll be fun to hear what they have to say. And hopefully we get Elon in a good mood. When we get him in a good mood, he destroys. And so it'll be interesting. Please don't be a train wreck. You know, my $350,000 plus in calls would appreciate it not to be a train wreck too. But I look at it this way. Worst case, tomorrow, I'm putting $40,000 to $100,000 more in Tesla. So... But yeah, today across the markets, man, you couldn't ask for more. PayPal up 2%, SoFi up 4.62, Square up 5%, Tesla up 2%, you know, meandering in after hours, but just a crazy day, guys. A crazy day. Who could have predicted last week and over the weekend that the market would be skyrocketing today? Actually, I think I did. So, just throwing it out there. Now, Let's look at the heat map real quick. Again, it's just nuts. I bought some Nvidia today. I don't think I put the portfolio part up, but I did buy 40 shares of Nvidia when it was up like 1.5% or something like that. Everything's up. I mean, everything. There's not really a sector that got hurt today, which I think is just a great sign. And we're going to go over some of that in a second. If you guys see, watch that ticker in the left side. If you guys see and the left side, so weird when you're backwards to everything. When you guys see that thing pop or drop, you got to let me know, okay? I'm going to be focused here. All right, so Coinbase didn't make any trades. Up today, I think like 7,000 or something. This is my primary shitcoin account. Thank you to the 405 people that are here, and Christian, everybody that's joined in just this session. Thank you guys so much. The support is super appreciated. But yeah, so shitcoin's doing all right, going up. Don't show any percentage gains. Coinbase is so weird on this scroll. I don't get it. Oh, dude, we're popping? Wait, now we're dropping. Whatever. Just let me know what happens. I ain't looking. Coinbase, or I'm sorry, Crypto Bubble. Oh, dude, are we popping? Oh, what? Oh, bring it, motherfucker. All right, we got to check it out. What's going on? What's going on? Let's see. Nope, not that. Need this. Okay. Refresh. Somebody got earnings. Let me do this. I'm going to jump. If you guys see anything, let me know. I'm going to jump onto X real quick here, just to see if somebody has the deets. Oh, dude. We making some money today, boys. Making some money. Fuck you, naysaying assholes. I gotta adjust my screen. I'm sorry, the wick went off the screen. Let me fix this, guys. Let me just adjust it real quick. We're up almost 8%. Oh. Well, I mean, it could still get fucked up, but damn! Woo! All right, what do we got here? Let's see. Anybody got anything? Tesla. Somebody got it. Somebody got earnings. Where is it at? Oh, this is so much fun. Oh, I just love seeing it. We made 10% today. Oh, my calls are going to love this. I'm still seeing nothing on the release front. Somebody's got the details, though. Let me see. If you guys see an article from anybody on X or anything, let me know. Hopefully I'm looking in the right place. I swear to God, this is where it normally is. Let me see. I'm just going to do home. Maybe it'll pop up in here. Kelly's talking about cakes. Somebody's talking about Bitcoin. Katy Perry's showing off her Cybertruck. That can't hurt. For the love of Pete, what is going on? Tesla Q1 earnings came out. Tesla 1Q, 21.3 billion estimate, 21.48 billion. They made their revenue estimate. 0.45 EPS. I can't believe that. That's not a bad number at all. People thought it was going to be way worse. You know what that means? That means that Cybertruck ramp isn't going as bad as everybody wanted it to. Let me see if I can find any more details here, though. I feel like I'm missing out. There we go. Yeah. Gurgaban. He's got it here. Yeah, that's beautiful, man. That's so good. All right, let's see if I can get the official press release. Sometimes it doesn't refresh very well. Let me see. Tesla Q1 earnings release details. Let me see if I can find it. Come on, Tesla. They've just got production. Yeah, I don't see where it is. All right, I'm going to keep moving on. I'll check back to it in a second, guys. Obviously, it's looking good. They beat on EPS, or they lost on EPS and revenue, but honestly, it's a beat because everybody, like we were talking about, them going red and having a negative EPS or negative net income. So, I mean, it's fucking great. We'll find out in a second. I don't actually have the release yet. It still just shows April 20th or April 2nd for the release information, which is just production and delivery. Somebody's got it, though. Somebody's got it, and we will go over it. It could be my cache. I guess I could check. Let me see. How would I even... I don't want to clear browsing data. How do you do a hard refresh? Remind me, it's been ages. Command, what is that command? There's a heart in the way, something, shift, then press R. Command, dang it, move. This stupid heart is sitting in my way. Command up arrow. Command up arrow. All right. No, I still don't see it. Do you guys see it? Tell me where to go if this isn't the right place. I mean, as far as I know, this is the right place. Let me go back here. Yeah, see, that's the right place. Investor relations. Oh, wait. Nope. Okay, now I'm here. All right, there we go. All right, cool. Let me get the PDF. We got it. My bad. I'll remember that for next time. Let me do this. I'm going to change this where I don't have my dark mode on. It's going to get a little brighter in here. Is that really the look? Okay, maybe that's the look. All right, profitability, 1.2 gap, operating income Q1, 1.1 gap, net income Q1, 1.59 gap, net income Q1. Let's look at some charts here. I want to go down. I want to see what their summary is before we get too far. We already know they did way better than I thought they were going to do. I mean, you got to realize from Q4 to Q1, they, 494, almost 495,000 vehicles produced to 433. That's shocking to see that they're anywhere close on revenue. I'm just going to scan real quick and see if there's anything notable, and then we'll go back. I want to see the pretty charts. Global BEV market share. Don't care so much about that. We'll go back in a second. I'm just trying to see what's on here, guys. Love the Tesla ecosystem. That's a cool chart. That's exciting. Oh, you know what? Let me see. Is this... I should have this turned off. Let me do this. There we go. Much better. All right. Final assembly line. God, look at all those Cybertrucks, guys. Look at all those Cybertrucks. It's going to be the worst market cap recap ever. I'm just going to be 100% on Tesla. Oh, you know what's funny? The GMC, the Hummer, and what was it? The Hummer and the GMC Silverado. The Cybertruck has already outproduced the combined total of those two in production. Isn't that insane? Isn't that nuts? Oh, ride-hailing app! Fuck yeah! Sorry. I knew it. I called this shit. Oh my god. Oh my god. They're getting ready for it, guys. Robotaxi's coming. Dojo training cluster, not render. Sweet. Oh, we're getting updates on everything. Everything. Oh my god, guys. Oh, this is so exciting. Startup construction near Giga Nevada. That's great. That's great. We're going to get the battery facilities going up. Squeezing every penny out of the vehicle cost. Look at that Cybertruck. Oh my God. I'm so happy right now. All right, here's some fun stuff. Key metrics quarterly, unaudited. Vehicle deliveries, we know we had a drop. Free cash flow dropped by about $2.5 billion. Not shocked by that at all. At all. Net income positive, though, by almost $1 billion. Adjusted EBITDA looks fine. Trailing 12 months of vehicle deliveries. If you look at this, the trailing 12 months, it's our first real little dip, right? And Q2 is going to be way better. You're going to have the Model 3 ramp. You're going to have the Cyber for the new updated version of it. You're going to have the Y refresh. You're going to have the Cybertruck getting really ramped in Q2. You're going to have the trials expiring for FSD and people being able to get premium subscriptions at $99 a month or buy at $1,000 or $8,000. All that stuff is coming in this next month here. All right, so that's financial. So let's get back above and start going through this. The ride-hailing app, guys, is so exciting. The fact that they're previewing this is nuts. This is so exciting. I'm going to switch views here real quick. We're going to go to full screen. I'm trying to get a little better with my presentation here. So we're going to start at the top. Read the summary. We're not going to look at all the financials. That's boring. We're going to read the summaries here. We experienced numerous challenges in Q1 from the Red Sea conflict and the arson attack at Giga Berlin to the gradual ramp of the updated Model 3 in Fremont. Excluding Cybertruck and unscheduled downtime, our COGS per unit declined sequentially, driven primarily by lower raw materials. Global EV sales continue to be under pressure as many car makers prioritize hybrids over EVs. While positive for our regulatory credit business, we prefer for the industry to continue pushing EV adoption, which is in line with our mission. To support our growth, we have been increasing awareness and expanding vehicle financing programs like the 0%, the 2% stuff we were seeing in Germany, right? Let me see, to support our growth, including attractive leasing terms for our customers. That's sweet. So leasing, finance rates are going to get better. I wonder if I could get a better rate on my Cybertruck. Probably not. Damn it. Anyway, while many are pulling back on their investments, we're investing in future growth, including everybody's pulling back, guys. GM was just celebrating that they basically stopped building the majority of their EVs. Fucking insane. Future growth, including our AI infrastructure, production capacity, supercharger, and service networks, and new products infrastructure, with $2.8 billion of capital expenditures in Q1. Almost $3 billion of them expanding and doing CapEx. Fuck, nobody can compete. We recently undertook a cost-cutting exercise to increase our operational efficiency. We also remain committed. You know what? I just got to say, I feel bad for all the dip buyers. I try to tell you motherfuckers. Try to tell you guys, all of you, everybody. I try to say, nope, you don't want to wait. You don't want to wait. 95% of people want to fucking wait. Now you got to chase these guys. Anyway, going back. We recently undertook a cost-cutting exercise to increase operational efficiency. We also remain committed to company-wide cost reduction, including reducing COGS per vehicle. Like, they've been doing that like crazy, but I guess we're doing it more. We're focused on profitable growth, including by leveraging existing factories and production lines to introduce new and more affordable products. The future is not only electric, but also autonomous. We believe scaled autonomy is only possible with data from millions of vehicles and an immense AI training cluster. We have and continue to expand both. To make FSD supervised more accessible, we reduce the price of subscriptions. We know that. We love you guys. Thank you very much. Raghu, thank you for joining, man. If you guys want to join, 5 days a week, almost 6 now, probably including Sundays, I will pull up charts, and to people that are members that pay at least $2.99 a month, I will pull up whatever ticker you want me to look at if you're a member, and I will look at the financials, and I'll look at the technicals, and I'll tell you what I think. You might not like what you hear, but I'll give it to you. Up 7% still, meandering around that 6, 7, 8 range. Who gives a shit? It's almost 9 on the day. Let's go to the next slide here. Financial summary, revenue. Total revenue declined 9% year over year in Q1 to $21.3 billion. Year over year revenue was impacted by the following items. Reduced vehicle average selling price, not surprised, year over year. Excluding FX impact, including unfavorable impact of mix in decline in vehicle deliveries, partially due to the Model 3 update in Fremont factory and Giga Berlin production disruptions. These guys had everything against them. They had everything against them, guys. Everything. It's just insane. And they still did all right. Still. Negative FX impact of $0.2 billion. So again, the dollar's been strong. It hurts them. That's what they mean by FX. It means foreign exchange currency. So growth in other parts of the business were a plus. Higher FSD, you know what that is. That's energy and services, right? Higher FSD revenue recognition year over year due to release of Auto Park feature in North America. So so they're already seeing this, guys. They're already seeing growth in the FSD side. Profitability, our operating income decreased by year over year by $1.2 billion in Q1, resulting in a 5.5% operating margin. I mean, I'm not surprised. Year over year operating income was primarily impacted by the following items. Reduced vehicle ASP due to pricing and mix, increasing in operating expenses partly driven by AI, cell advancements, and other R&D projects. So you know what that means? They're working on Dojo. Cost of Cybertruck production ramp, that's going to be heavy, but they're offsetting that by making people like me spend a fortune on it. So God bless them. Let's see, decline in vehicle deliveries, partly due to the Model 3 update in the Fremont factory and the Giga Berlin production disruptions. Lower costs per vehicle, including lower raw material costs. That was a plus. Freight and duty. See, guys, the raw material costs are dropping. This isn't the inflation that you've been sold on, okay? This is actually benefiting their numbers right now. Gross profit growth in energy generation and storage, including IRA credit benefit. So they're starting to see additional benefits from the IRA credit, and they're seeing energy storage and generation ramping. This is going to get sick, guys. You got to realize the superchargers, ones that have a lot of volume and that are in states that are friendly, or have energy companies that are friendly, or state programs that are friendly towards energy storage to basically offset peaker plants and make it to where these guys will put batteries in these charging stations. They can buy the energy at night when it's fucking dirt cheap. Then they can distribute it during the day, or if there's a power outage or if they need extra energy that the grid wants, that they can use the software they built years ago to push that extra energy towards the grid, probably making like 10x what they would pay in energy. So they're going to be able to make it to where these superchargers are just money printers in the future. I hope you realize what's coming. It is insane. Cash, quarter in cash equivalents and investments in Q1 was so we're at 27 billion. Who cares? Sequential decrease of 2. Who gives a fuck? Don't care. Negative cash flow of 2.5, driven by inventory increase and of 2.7 billion and AI infrastructure capex. I love the AI infrastructure capex. That has me super, super, super excited. I have to breathe. All right, there's so much happening right now, guys. So much happening. Just look at this. Look at these capacities. California, 100,000 just for the Model 3 and X. Model 3 and Y, over 550,000. Shanghai can do 3 and Ys at over 950,000. Berlin can do over 375. Texas can do over 250, and Cybertruck will be able to do 125. Now, I'm not super good with math, but honestly, Tesla doesn't even need to build another facility to have kick-ass numbers this year. They've got capacity for all this stuff right here. So Mexico, they can slow roll it for now, man. This is sick. Jody, thank you for signing up. I appreciate all you guys, man. Everybody who's supporting. I'll try and keep up with chat in a second. I'm just going to keep reading through stuff here, and then we'll get more involved in that, okay? All right, so a sequential decline in volumes was partially caused by the early phase of the production ramp of the updated Model 3 at our Fremont factory and factory shutdowns in Giga Berlin. We know that. Arson attack, whatever. U.S., California, Nevada, Texas. Model 3 production in Fremont was down sequentially as we changed the production line to the updated model. Sequentially, updated Model Y production at Giga Factory, Texas increased to an all-time high, while COGS per unit improved to an all-time low. I love that, man. And they've got it themselves switched over on the production line, which means we're going to see a lot of this pain maybe at the end, like it's ending right now in this quarter, or I'm sorry, in this month, and then should start ramping into May and June. All right, so we're going back down again. I don't care about the price. I'm not focusing on it. All right, let's see here. What else? Texas at an all-time high, while COGS units per all-time low. The Cybertruck ramped, continued successfully at Giga Texas. We know that they had a period of time where they had to shut down. We know they built like 3,400 trucks before they did that. So that's all good news. And then now they're at like 3,500 and ramping really fast. That's quicker than the Model 3 ramp, guys. So this is not a big deal. This is going well. This is definitely going better than other times. Giga Shanghai production. Giga Factory Shanghai was down sequentially due to seasonality and plant shutdowns around Chinese New Year. So again, Q1 brutal, right? Plus they're all out doing stuff during Q1 during the Chinese New Year. It's just the way it works. Demand typically improves throughout the year as we enter new markets. I still think it's going to be weaker, but I love entering Chile. Many of them will be supplied from Giga Shanghai. See, this is what we were talking about earlier, guys, in our posts. So these guys, they're going to start taking it. If they have excess capacity in China, they're going to start pushing out to other markets because they can make those vehicles a lot cheaper. And so if China does have issues with a slowdown, it doesn't really matter. It'll just work. My like button is not showing. Weird. Well, if you guys can find the like button, click it. Market share of Tesla vehicles per region. So US and Canada still crushing it. Europe second. China third. All right, core technology, artificial intelligence, software, and hardware. We've been investing in the hardware and software ecosystems necessary to achieve vehicle autonomy in a ride-hailing service. That's the focus, guys. I love that ride-hailing app. We believe a scalable and profitable autonomy business can be realized through a vision-only architecture with end-to-end neural networks. They don't need all the stupid shit that Waymo and those guys are riding around in. No LiDAR needed, no expensive setups, no shit hanging all off your cars. That's all garbage. Trained on billions of miles of real-world data since the launch of SSD or FSD supervised version 12 earlier this year, it has become clear that this architecture, long pursued by Tesla, is the right solution for scalable autonomy. 100% confident. Love it. To further improve our end-to-end training capability, we will continue to increase our core AI infrastructure capacity in the coming months. In Q1, we will complete the transition to hardware 4. What? Awesome. Our latest in-vehicle computer with increased inference processing power and improved cameras. Oh. Okay. This chart over here, FSD 12 miles, and then the overall miles. These miles are nuts, guys. These are fucking nuts. Look at this. Right here. Let's just go back here. Let's go to March 2023. This is where we were, right? This is where we were, guys. Down here. So about a year ago, we were down here and had like 150 million miles. Oh, I got to fix this real quick. We had 150 million miles, right? Now we have 1.25 billion. Billion. Do you understand the gravity of that? In a year, before they have a free trial, before they lower the price for the subscription and cut it in half, before they lower the all-in cost by a third, and they've already got this much. And they've got all the compute they need. I don't know what to say. Look at this training data. Holy. Look at this. Tesla AI training capacity. Oh, that's just the capacity. Look at that. Look at that difference. No wonder this has gotten so much better since the middle of this last year. Look at the capacity change difference. Just insane. Wow. Vehicle and other software. We rolled out FSD with a 30-day free trial to eligible cars in the US and Canada. FSD Supervised can change lanes, select forks to follow routes, navigate around vehicles and objects, and make turns. We released Auto Park to existing eligible FSD Supervised. I don't have that yet. And enhanced Autopilot driver or customers. At least I don't know how to use it. We are currently working on ride-hailing functionality that will be available in the future. We believe the Tesla software experience is best in class across all our products and plan to seamlessly layer in ride-hailing into the Tesla app. I told you guys, ride-hailing, the app, who knows? We might be hearing the date for it or it's coming after 8/8. Just be ready for it. There's a reason they got a slide for it, guys. Battery, powertrain, and manufacturing. 4680 ramp continued successfully in Q1 and continues to stay ahead of the Cybertruck ramp, which means that they're able to have 4680s, all the 4680s they need for the ramp. Costs continue to come down sequentially as scrap yield and production rate improved. Other highlights. Our non-automotive business is becoming an increasingly profitable part of Tesla. As Megapack continues to ramp and as our fleet continues to grow, we're expecting consistent profit growth for our non-automotive business. And the non-automotive, look at this. Even in a bad quarter, look at that. Look at that. It actually almost got up to its previous one a couple of quarters ago. That's great. We were seeing a dip in energy and storage before, and now it's gone. All right. Energy generation storage. Energy generation storage deployments increased sequentially in Q1 to a record 4.1 gigawatt hours in energy generation and storage revenue, and gross profit also achieved an all-time high in Q1. Revenues were up 7% year over year, and gross profit was up 140%. Imagine what happens when rates come down, guys. Don't focus on the ticker. If I have to take it off, I will. Imagine what happens when rates come down, and then you have these IRA credits and all this stuff sitting out here, and they unlock the energy, storage and production portions of their business while unlocking the auto sector all at the same time. Just imagine that. Revenues were up 7% year over year, and gross profit was up 140% year over year, driven by increased megapack deployments, partially offset by a decrease in solar deployments. Oh, hit the like, guys. Appreciate it. Thank you very much, Intelligent Computing, and I appreciate the $2, my friend. Energy generation and storage remains our highest margin business. They're not going to worry about the solar roof when they can make a shit ton of money in energy deployment and storage. Like that's where it's going, or energy generation and storage. Our second general assembly line is now commissioned. Sweet. And we can continue to ramp our 40 gigawatt mega factory in Lathrop, California toward full capacity. So they're working on that and building out a battery factory. Love it. Services and other revenue grew 25% year over year in Q1. That's amazing. This wasn't even supposed to be a profit generator. In Q1, while gross profit was down 40% year over year, don't care. Biggest driver of gross profit reduction year over year was lower used vehicle profit, partially offset by growth in gross profit from part sales. Starting at the end of February, we begin opening up North American supercharging network to I know that's so exciting. They're going to open up to non-Tesla EVs, guys. And these people are going to have to pay a subscription to get the rates I get. And if they don't pay that, they're going to pay more. More revenue coming in Q2, guys. This is so sick. We'll continue to onboard OEMs who have committed to NACS over the coming quarters. We will also open more sites to other EVs in regions outside of North America, both of which should drive incremental revenue and profit generation. Look at that, guys. A new high. This is just insanely good. Outlook, volume. Our company is currently between two major growth waves. The first one began with global expansion in the Model Y3 platform, and we believe the next one will be initiated by advances in autonomy. Yes, it will. I've been saying it. See, you gotta actually know what the fuck you're talking about instead of being a fair weather Tesla supporter who acts like Elon is a curse on everything Tesla. He built this fucking company. He built SpaceX. He built Neuralink. He built the Boring Company. And you don't believe in this motherfucker? God, people piss me off, man. Anyway, major growth waves. The first one began with global expansion in the Model Y and 3, and we believe the next one will be initiated by advances in autonomy and introduction of new products, including those built on our next-gen vehicle platform. In 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023. That is fine. I don't care. That is not the mission. That's not where the margins are. As our teams work in the launch of the next generation vehicle and other products in 2024, the growth rates of energy storage deployments and revenue in our energy generation and storage business should outpace the automotive business. Wow, Frenchie, don't piss me off. I get vocal. All right, cash. We have sufficient liquidity to fund our product roadmap. They've got $27 billion. They got more than enough, guys. More than enough. They can create the business. They can underprice fucking everybody. Long-term expansion plans and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during this uncertain period. So they're still saying, hey, there's worries out there. Isn't going to fucking matter for us. Doesn't matter for us. Our margins are going up. This is not for kids anyways. I did mark it as not for kids. We should be safe. All right, profit. While we continue to execute on innovations to reduce the cost of manufacturing and operations over time, we expect our hardware-related profits to be accompanied by an acceleration of AI software and fleet-based profits. Hey guys, I expect that too. I guess I should be a financial analyst. All right, product. We have updated our feature vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025. Wait, what did I just read? We have updated our future vehicle lineup to accelerate the launch of new models. They're accelerating them. They're accelerating them. Did you guys hear that? Okay, cool. Ahead of our previously communicated start of production in the second half of 2025. So we're moving faster, guys. Get ready. These new vehicles, including more affordable models. New vehicles. Are you guys hearing new vehicles? Are you guys hearing ride sharing app We're getting the van robotaxi, we're getting the Model 2, and we're getting the ride sharing app, just like I said. Unbelievable. These new vehicles, including more affordable models, will utilize, the Model 2 will utilize aspects of the next generation platform as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our existing vehicle lineup. That's insane. Anyan and everything, thank you for joining. This update may result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more CapEx efficient manner during uncertain times. This would help us fully utilize our current expected maximum capacity of close to 3 million vehicles. What? They want to be able to utilize their 3 million vehicle capacity. Enabling more than 50% growth over 2023 production before investing in new manufacturing lines. What? They can do 50% growth before we even build Mexico or India. Unbelievable. Brian, Tesla minivan for us parents. Hell yeah, but I think it's just going to be a robotaxi, but we'll see, man. I'd take that too. Maybe they could do something that's really both. They could make something very customizable. C-list, $2 and a little wolf waving at me. Thanks, man. Appreciate it. Oh, this is insane. Let's just look at these photos again, guys. Let's go in here. Oh, my brain hurts right now. I need to see. I don't even know how to change any of this. Oh, there we go. Cool. Let me see. Yeah, okay, that's better. Let's get this in view. So, electric vehicle adoption rate remains under pressure, especially outside of China. Global BEV market share, 12 months rolling. So, they're saying EV adoption has kind of hit a little sputter here, but it's not going to matter for them because they can do whatever the fuck they want. All right. The Tesla ecosystem. Let's look here. All right. This is insane. Look at this, guys. Look at this. You got solar. You got that leading into energy storage. You got auto bidder. That's the software that they'll be able to use to make it to where they're money printing on all their superchargers. They don't need to put fucking solar on these houses, guys. They don't need that shit. You know why they don't need it? They don't need it because they can literally put solar and put battery storage and use auto bidder to give back to the grid when it needs it, make money that way, and then pull from it. And when the prices are the cheapest, they can do all of that. Then they do their own lithium refining. Hey guys, click that link if you want 10 free memberships. And JP Stowe, thank you, bro. You guys are way too good to me, man. Lithium refining leads into battery cells. Energy storage leads into charging. Charging and battery cells lead into vehicles. Vehicles go to the service and collision where they can make money. Vehicles go to insurance. Vehicles go to rideshare. Vehicles go to FSD supervised. FSD supervised goes to AI compute. Or I'm sorry, humanoid robots and AI compute go into FSD supervised. This is insane. I couldn't have asked. I can't wait to hear the call today. I got a feeling Elon's going to be in rare fucking form, guys. So this will be a fun one. The shorts are going to hurt tomorrow. Starting at $299 a month in the US or $160 a month after profitable gas savings. $300 a month Model 3. And now they've got the performance. Oh my God. And they're building all these cars, and all these cars are going to contribute to the ride-hailing service, are just going to increase margins exponentially. Are there 800 almost people in here? You guys rock. Hey, if you guys could share this on your X or whatever, let's get more. So let's see if we can break 1,000. This is already a record for me. I'm stoked. Let's get more. Cybertruck, look at this assembly line. Look at this, guys. I can't wait to get my truck. I am so excited. And again, I just want to remind you, if any of you guys came in late, the GMC Hummer and the Silverado EVs have produced less fucking vehicles than the Cybertruck. Sorry. Can't help but heckle that. It's fucking hilarious. All right, the rideshare app that everybody told me I was stupid. Me, Kevin, hey, guess what, man? I know more than you do. I knew this was going to be a good quarter. I knew the ride sharing app was coming. I knew the Model 2 was still coming. I knew the robotaxi was coming. I knew margins were going up. So if you want any pointers, man, I know you got 1 million plus followers, but if you want to know how to do this shit, I can help you out. I'll give you a course. How's that, motherfucker? All right. Sorry, my bad. Got a little intense there. Just look at this. Look at this, guys. It's got a summon button. It shows the routes for the parking. It shows the interior climate controls. Imagine you hop in this thing, you can control the climate from your phone. Shows when you're getting there. Allows you to play music from your phone while you're sitting inside of this thing. Kaylee, Edwin, thank you everybody for joining. Thank you for the tips. Silas, you guys are insane. Imagine we'll be able to do everything from our phones. Everything. You'll be able to get a ride. You'll be able to do everything. Sorry, I didn't have the slide quite on there. Got to get used to all this. I'm trying to get better at this stuff. This right here is a training cluster of Dojo. Or is it NVIDIA? It's probably NVIDIA. Does anybody know? Lol, love me, Kevin, jab. I'll give you a course. Yeah, I'll have to do a YouTube short and send it to the motherfucker. Sorry. He's just been pissing me off lately. I don't like fair weather people with businesses. People that think that they're smarter than great people like Elon Musk. I don't appreciate that at all, especially when those people made a bunch of money. It's Dojo. It's Dojo. It's Dojo. Oh my God, it's Dojo. All right, I don't want to talk about that right now, but that's amazing. That's crazy. Look at these mega packs. This is in Hawaii, right? Is that right? Kapaolai? I think that's Hawaii, right? I don't know if I'm saying it right, but I think that's Hawaii. This is awesome, guys. Hawaii needs this. They need this to avoid a lot of problems and to be able to have energy, when shit's going crazy. Kevin is pissing me off lately, too. He sucks, dude. You know why he sucks? Because he totally changes his mind. And don't get me wrong, there are some things I like about me, Kevin. I like the old version of him a lot. If I could dial back 2 or 3 years, love the guy, right? Love him. Oh, it's in Oahu. Okay, I thought so. Thank you, Roy. I love the old version of Kevin. Kevin, if you can turn into the person you used to be, I would love to watch your channel again, right? But you've went down this road, the Ross Gerber road of failings, where you think you need to have your own funds and where you're going in 100 million directions and where you're becoming, like, I would say borderline emotionally unstable, and then changing your mind based upon your positioning. And I think that's bullshit. That's disingenuous, okay? You guys know, I still talk about Mara. I don't even own that shit. And I don't even know if I like the company. But do I pull up the chart? Do I talk about it fairly? I think so, right? I don't shit on companies just because I change my positioning. I didn't shit on Tesla after I sold all my calls at the beginning of the year so I could avoid the majority of the drop. Okay? I didn't do that. That's the way you should be. You want to be good? You want to help out your members? Maybe actually try and be genuinely, truthfully honest with yourself and judge things the way you believe they should be, no matter how you're positioned. Speak about them fairly. Try that. Let me know how it goes. Old Kevin would have loved that shit. New Kevin? I don't know. He's like a politician. Tesla Semi. Start of construction near Gigafactory, Nevada. Whoa. Semi ramp is coming, guys. Will we get a chance to average the Tesla calls? Fuck no. I've been trying to warn everybody. Everybody. Maybe there's a dip. Maybe by some miracle there's a dip. We're up like 10% though, guys, in the last, since yesterday. I've been trying to warn people to buy, right? I've been trying to say that. All right, cost grind, squeezing every penny out of every vehicle. Look at that Cybertruck. Just look at it. If you looked at a regular vehicle compared to this, I don't have a graphic for it. It's insane. Insane. There's so many extra parts than what you're looking at right here. You'd have to zoom way out. It's crazy, guys. We already looked at key metrics. Yeah, we did this stuff. I'm bored. I'm bored with the financials. I don't want to look at it anymore. We'll get plenty of stuff here in a bit. I don't know if we're updated on this yet. Alejandro, you here? There's so many people here. I can't even see if you're here. Never trust an Excel spreadsheets analysis of an innovation. Yeah, exactly. And just give Tesla the benefit of the doubt. How many times do they need to be amazing? How many times do they need to exceed everybody's expectations? Can you guys tell me? Like, how many times do they need to do that? We got Q1 data already. No, that's vehicle deliveries. Do we got revenue? You got revenue. Alejandro, visualstocks.com, guys, visual with a Z instead of an S, already has data in here reflecting everything. The call? When is the call? Shit, is the call already happening? Am I gabbing my way through it? No, we got 47 minutes. We're good. We're good. 47 minutes. It's actually, it's at 4:30 Central Time. We're good. All right. Again, this cash level, not that bad considering. Gross margins for Q1 are better than Q4 of 2023 for non-auto gross profits. Again, I just love looking at this, guys. I love looking at this because it just shows how Tesla will be able to put the screws to every other auto manufacturer on the planet. You know what? I'm going to switch back to me. You guys are going to get animated Jesse. And plus, we got to see the price, right? We got to see the price over somewhere, whatever. I'll figure this stuff out eventually. I'll know what I'm doing someday. I got that little intro. Did you guys see my little micro to macro intro? That was exciting. Now, again, just everything here. Slight, like, topping off of operating leverage during this last year to me is nothing. Nothing. I honestly, it's amazing that we haven't dropped much more. It's ridiculous. What are we making per vehicle? Do we even know? Are those calculations in yet? Let me see here. We got some key charts. Let's look, and then we'll look at guidance here too if we have it. Profit per vehicle is $7,200. BYD is probably like $1,000 now, guys. We don't even know their numbers yet for Q1. They're probably like $1,000. Okay? Yes, let's pull together and intercept Jesse's Cybertruck. We'll take it apart to be sure it was a simple correct. Dude, don't touch my Cybertruck, guys. I need it so badly, but I do appreciate the $5, Silas. Thank you, man. But we're still making $7,200 a car. Like, I can't tell you how crazy that is. Every other Chinese EV maker combined does not make the profits that Tesla makes on their car. Every other one. Nobody. Is Legacy Auto there? They're not even close. I'll show you charts in a second. They're not even close. And now we have, let's see, superchargers. We have 6,249 up from 5,952. So they made 300 more supercharging stations, of which they're going to be able to make tons of money from non-Tesla EVs. Tons. Energy storage deployment, new all-time high. Solar, nobody cares. Nobody cares. You got to realize, it's smart that they're not fucking around with solar right now. You want to know why? China had drops in solar panels of 50% just this last year alone. There is no competing against that. So they're not. They're competing everywhere that they're going to make a ton of money. Let's look at ASP and versus COGS and vehicle. Look at that. COGS per vehicle coming down, or actually kind of remaining flat. Overall, you got to realize COGS per vehicle also went up. It went up because of the fact that they've got the Cybertruck ramp and they're doing refresh models, right? And they're going to be doing, the Model 2, and they're going to be doing the Robotaxi. So cost per vehicle could be flat to up going forward. That's just it, guys. Cherry on top, Starlink lifted its target for 6:17 p.m. Eastern during Tesla show. I'm sorry, can you clarify what you mean by that, Florida Soth? I don't know if I'm reading the whole thing. It's kind of a little bit cut off in my screen. Inventory days in supply. We know that went up, but I should be able to show you something here. Let me see if I have my screen for inventory. If I don't, I do. Let me go to inventory here. This is the worst market recap ever. We're not focused on any of that crap. But here's what I want to show you. So they showed a massive increase in inventory supply, right? But look here. Look at that huge dunk. Now we're going sideways. In phase down after hours earnings today, I believe. Yeah, they're just going to suck, guys. If you guys haven't seen why the Powerwall 3 is crushing in phase, you should watch one of my recent videos. I can make a standalone for it too. But yeah, look at this. So we had a massive reduction from about, let's see, in their quarter earnings, or their end of quarter, they were probably right about here. 8,400 Model Ys, pretty much the same level on the Model X. A little bit higher now on the Model 3. But again, that's going to change. Once the refresh, once they start ramping these things, they'll go quick. They'll sell these things for a lot cheaper. They'll offer 0%. They're going balls to the walls, guys. It's happening. But again, a massive reduction from the local peak here of 9,700 Model Ys down to what we're seeing today at 6,698. Just a massive drop. So you got to realize they're actually lower in inventory supply. And these inventory supply numbers are nothing compared to legacy auto because you don't see all that crap. They're all sitting in dealers. It's just nuts. Look at this. Look at the energy gross profit margins. Look at that number creeping above auto. Look at that. The last couple of quarters, it's just still hanging there. And it's going to go up higher. Services is maintaining. Auto's dropping. We don't care about auto, guys. We don't care. That's not where the profits are going to be made. They'll be made on FSD. They'll be made on energy. They'll be made, they're going to be made on everything else, guys. You don't even need to worry about it. Let's look here. Nothing on institutional ownership. We just have Q4 that crept up. Short interest, 3.88. Oh, let me see something real quick, guys. I got some new tools. Let's go to Ortex real quick. I pay $100 and something a month for this. So this shows real-time short interest. So we can pull this up here and see what's going on with Tesla. And then we'll just go over here to live short interest. Oh, let's see. There's still not a lot closing out, actually. Which means tomorrow is probably the day they get wrecked. Maybe we don't have enough volume. Cool. Well, if we're up as much as we are, and we haven't even liquidated the shorts yet, this is going to be fun. This is going to be good stuff. All right, let me go back over here. Let's just look a little bit more. And then I've got some posts I want to show you guys. Just really cool stuff, guys. Lots of good stuff. Guidance. Look at that revenue guidance. The revenue guidance is for a record. For a record. I'll check how many shares on loan in a little bit here. A record for Q2, guys. A record. EPS getting higher again, beating this quarter by almost double. Oh, the Bears. The Bears. They're going to be in so much pain. Let's go back to Ortex. Let's check out. Let's get off live short interest and look at what they were looking at earlier today. All right, let me see here. So, and let me change this. I'll change this to a longer time frame, like 18 months. I love this tool as far as short interest goes. So you can see how short interest as a percentage of free cash, or is that float? What is that? FF. What is FF? Free cash flow. Free cash flow was up dramatically. I mean, people over the last 18 months, it was the highest levels we'd seen. Short interest value is lower, but again, you can't really look at that because the value of the stock was lower, right? Short interest days to close is 1.09, so it's climbing. This climb is going to be painful for the shorts. Short interest 107.6 million shares, highest level we've seen in 18 months. Shares on loan 27.44 million. So I wish it was at levels that we saw on like April of 2023. That would be sick. But so we're not there. Maybe people will borrow. God, can you imagine people being stupid enough? I hope so. Cost to borrow is going up. Utilization, short score. So yeah, this is getting interesting, guys. This is getting interesting. This is good stuff. We haven't seen a really major squeeze yet. I think that's coming tomorrow. I think tomorrow these guys are going to get wrecked. Absolutely wrecked. Shorts are going to get devastated. It's going to be an apocalypse. Oh my God. I just can't. I don't even know where to go next. Let's go to X. Let's go to X. We got stuff to look up here. All right. We got some stuff we want to look at. This is not a market recap. I'm sorry. I guess that's not happening. Let's go back here. We want to look at miles driven and FSD. Sorry, I'm not sure if that played. Miles driven for FSD. Let's watch this, and then we got another fun one. Look at that. Look at that. Does that put it into perspective? Up 9.5% after hours. Well, why not? Who cares anymore? I don't even care. We're going to make so much money, guys. So, I don't know if you guys remember, but I got a bet that pretty much guarantees me $2 million now in the next, year with Tesla stock and profits. 4.85 million, maybe. That could happen. Maybe in a year and a half. It could go to 10 million or higher, but I don't know. I'm not really worried about it. I mean, 2 million is enough for me, guys. Anyway. All right, so let's look at our next slide here. Got to work on my little slide thing here. All right, so let's listen to this one. Tesla's annual income. This is a fun one. Again, look at that ramp. This is the company people are shorting. All right, this is going to blow your mind. I want you to see what happens here. All right, you guys got to see what happens here. So this Tesla has a lot of stuff to overcome. A lot of stuff. It's got a vehicle stopping in the road, and just watch what happens. Watch what full self-driving can do. If you don't have this, you need to know how good this is. Watch this. That car is slowing down and pulling over. FSD has made a decision that it should go around. There's a car coming. It's in the middle of the road. It cuts back over. It stops behind this other car. It waits. It goes because it knows it has enough time to get in front of this truck. And it's good. Do you have the balls to do that? Do you? I doubt it. All right, more fun data. What do we got here? Tesla has a record 29 billion. Well, it's 27 now. Tesla released the performance edition of the Model 3. What does that mean, guys? I don't know. Let's find out. Let's see what Sawyer Merritt had to say about it. So he did a comparison between a BMW M3 that costs $84,300. It's rear-wheel drive, right? This one is all-wheel drive, it's performance, and it costs $52,990, $45,490, including the federal tax credit. It's 0.5 seconds faster than in the $84,000 BMW. It's $32,000. Oh, I'm sorry, no. What? $39,000 cheaper than the BMW. It goes 0.5% seconds faster, and it's cheaper to drive. Which one do you guys want? Fuck the BMW. I used to like them. They're not Tesla, so I don't care. Sorry, I know I'm so bad with chat, guys. You're gonna have to tip or something, so I pay attention. All right, I want you guys to hear this. I want you guys to hear this. This is important for you to hear. This is my friend Franz von Bullhausen, butchered that, talking about what his favorite vehicle is.
I'm curious if you have a favorite design, favorite feature, something that you're most proud of.
Favorite one is the one that's coming. I think that it can't talk about.
I'm curious.
So the Cybertruck isn't the favorite. There's a lot more coming on top of that, right? And let me see, there's some other things I wanted to show you guys. I might have them down below. All right, yeah, this is what I wanted to show. All right, So I said Tesla's second quarter if it isn't a complete disaster, and or they announce strong energy growth, and or positive guidance because of Elon Musk is in a play nice mood, shorts are absolutely fucked. I didn't even include seeing the ride hailing app. Didn't expect that at all. Didn't expect their guidance to be this good. And they're doing all this stuff. So here's what I said about that. I said these three gaps right here are closed. They're just closed, right? Heck, we've already closed 2 of them. This other one is closed. We're going to 172 in short order. Short order. Tomorrow morning, probably. There's potential that we break above that and squeeze shorts and get up to the 200 level in a short period of time. From 140 to 200 in a short period of time. I'll take it. My calls will take it. Might have to trim some off because now I got to figure out what other stuff I want to buy with all the money I'm making. It's going to be rough. Pray for me, guys. All right. So I said this earlier. I said Tesla China still looks like shit. This is me having 350,000, put over $500,000 in calls in Tesla, telling you like it is. That's lesson number 1, me, Kevin. But I did have something else I wanted to say. And here's why I said it was shit, right? If we look down here, this year so far, right? This year so far, 17,300, then 1,900, 6,200, 5,100. If I go back to 2023, we crushed all those numbers. So this quarter sucks in China, right? Now this is insured. You know what that means? China ain't selling these, just like they're not selling iPhone 15s, right? They're pushing their own shit. You know what doesn't matter? Any of that. Because like Tesla just said in their slide deck, they're pushing this stuff overseas to other countries. And they're reaping all the benefits of being in China. And then they're pushing the stuff to other countries and selling them. So their China-related risk outside of war is super low. Who saw that coming? Me. This is another one I posted today that I thought was kind of interesting. It says Tesla's down 45% in 4 months, and people are trying to wait for the dip. The dip. Good luck, guys. I'm praying for you. Good luck with your dip. Now you're chasing. Now you feel stupid. Again, insurance data, it's trash. Who cares? Oh, this one's good. This one's good. This one's good. Somebody posted this. If you guys haven't read the book, if you guys haven't read this book right here, you need to. It's about Elon Musk. It's about how hard this man works, how he puts his company before everything, everyone in his life. He's more devoted towards literally his goals in the future and making humanity a better place while also giving us the ability to be somewhere else if we destroy it. He gives everything to it. I'm going to read this passage real quick because I think people need to realize this. This is a book. This is from a book that was started years ago. Self-driving FSD to be ready. At a fateful and dramatic meeting on August 18th, they gathered to hash the issue out. Elon said, "We want to make sure we're assessing the risk with you," Von Holzen said to Elon Musk. "If we go down a path of having no steering wheel and no FSD is not ready, or an FSD is not ready, we won't be able to put them on the road." He suggested that they make a car that had a steering wheel and pedals that could be easily removed. Basically, our proposal is to bake them in right now, but remove them when we're allowed to. Musk just shook his head. The future would not get here fast enough unless they forced it. Small ones, Von Holzen persisted, which we could remove pretty easily and design around. "No," Musk said. No. There was a long pause. No mirrors, no pedals, no steering wheel. This is me taking responsibility for this decision. The executives sitting around the table hesitated. We will come back to you on that," one said. Musk got into one of his very cold moods. "Let me be clear." I think I've heard this one on the stage not too long ago. From pointed towards the Disney CEO. He said slowly, this vehicle must be designed as a clean robotaxi. We're going to take that risk. It's my fault if we fuck it up. But we are not going to design some sort of amphibian frog that's always a half car. We are all in on autonomy. A few weeks later, he was still jazzed about the decision. On his plane, flying from dropping Griffin off at a college, he joined the weekly robotaxi meeting by phone. As always, he tried to instill a sense of urgency. This will be a historically mega revolutionary product, he said. It will transform everything. This is the product that makes Tesla a $10 trillion company. This is. People will be talking about this moment in 100 years. This is the guy you're putting your money behind. Do you understand that? This is the guy. The guy who a year and a half, whenever this was, said, no, we're building the robotaxi without a steering wheel, without pedals. It will be full self-driving. And now he really believes they're accomplishing it. When this was written, he didn't even have 12.3. It's all changed. You guys have to realize this, man. And this, how many times did I try and tell you this? These are the times, we're at a phase 4 consolidation on Tesla. These are the times where the weekly RSI was the most oversold. What did the stock do? It more than doubled and then went up again. This time, it went up 3,300% over the course of a year and a half, 2 years. Or I'm sorry, two and a half years. 3,300% from the bottom of this one. From this one, it went up over 200%. And now we were nearing it again. We were right at it. What did you guys think it was going to do? And this man right here, I just want to remind you again, I want to go on a tangent here. Elon Musk is trying to help freedom and democracy all around the world. Sure, he has a facility in China. He's building cars there. You know what? He probably loves those people and wants to help them too. And we should want the Chinese people to be successful. Not the fucking CCP, but the people in China. But now he's going to be helping Mexico. He's going to be helping India. And that man right there, Javier Milei, will get a gigafactory in Argentina within 3 years. I predict it. At least the announcement. So you better be ready for it. And Elon at the same time is protecting freedom of speech in this country, around the world, including places like Brazil, where they're trying to become a dictatorship. The judicial branch is literally imprisoning political officials without any real cause, making up rules, locking their bank accounts, no due process. That's the fucking shit they're facing in Brazil. And this man that people love to hate is trying to keep these people free, teach them how to use a VPN, and make it to where they can circumvent their government because their government is breaking their own laws. That's the man. And like I said this too when I was 100% right. I said these 0% offers in Germany and the 2%, 0 to 2% offers, they'll be doing more of that. And they just said that. They just said that in their presentation slide. So they're going to be doing more like subsidizing of the rates, cheaper leases. They're still going to spin out and grow. And they said they want to still reach their 3 million goal of production rate. I don't know if it was for this year, but damn. They've got all the levers, guys. And that's why I'm excited about this, right? I'm excited about this. I'm excited about, and you know what? I've got so many more shares than I had in this slide. I've got so many more shares. So if Tesla got to $900, which would be 50%, that would be a doubling of its previous all-time high in the next almost 2.5 years. I would make $10 million. This number's too low. If it went up 50% higher than its previous all-time high at the $600 range, I would make about, I don't know, $5 million, something like that. And then if it went just to 420, just the previous all-time high, right around that level, I make about $2.5 million off of this investment. A little bit more than this, actually. It says 374. Probably got 450 to 5 now. So I will make a ton of money off of this. And it just comes from having conviction, guys. You can't let the price of shit scare you. You can't do that. That is not how you invest at all. The price is a gauge for whether it's under or overvalued. The fundamentals in the macroeconomics of the world are the decision makers on whether or not that company will be good or bad. Okay? The price is just a should I get in now or is it too high based upon the macro and the fundamentals. That's how you invest. If there's anything I can do during my time with you guys, please have it be that. Learn that. Learn that macro is the bottom of the pyramid. Fundamentals are the middle of the pyramid. And then it's the technicals and the price action. That's how you do it. It's the only way to do it. All right, Clay, thanks, man. Thanks for the $9.99. For me, listening to you stroke Tesla at 139 inspired me to buy more. Hey, man, I'm glad to hear it, bro. Amir Rahman, fucking salute to Elon. Dude, he's a great man. I don't know if I'd want to have him as a father. I don't know if I'd want him to be that. But he is a great man. He is literally putting his entire life on the sideline to make the world a better place in every possible way. Are you elderly? Can you not drive yourself around anymore? Wouldn't it be great to have a car that did that? Or if you're paralyzed, whatever. You got a car, and you know what? You can get in the car because the robot can pick you up and put you in it and then hang out with you and be your friend and make it to where your family or some care facility doesn't have to wipe your ass and do everything for you. I mean, just think about that. It can give people back their dignity. I don't get people, man. Fuck them. Fuck those idiots. All right, I'm going to get back. What are we at? We got 20 minutes. I'm going to get back to the market recap a little bit here, guys, since I've sucked at that. Let me just scroll over here and see where I left off. I'll try and read up on chat. Amir, fucking salute to Elon, Edwin, dropping knowledge, Mike Pepper, preach Jesse, amen. Amir, my call should let me get the bloody paid plaid soon. Dude, that's so cool. Congrats, bro. Definitely going to pay for my Cybertruck. Pretty easy. I'm glad I just got like a 6% loan on it. I'm so glad I did that. Like, why would I put $100,000 to a Cybertruck? I'd rather have it in Tesla stock, right? I'm going to get a wicked return off of that. Anyway, I'll be able to buy the Roadster with it. That's the one I want, man. Give me that Roadster, bro. Give me that Roadster. You know what? My goal, I'm just going to throw it out. I'm going to put it out into the universe because that's how you make things happen, right? 5 years ago, I told my wife I was going to be, you know what? I'd say for a couple of years before that, I told my wife I was going to be retired. I told my boss I was going to be retired. He fucking laughed at me. He thought it was a joke. A year later, I retired from my job. After that, I said, hey, to my wife, I'm getting a Tesla. She's like, I don't know, man. We're not working. You know, when I retired, I had $375,000 in my investment account. It was insane. Anyway, made that happen a year later. So not only retired, I bought a Tesla like I wanted to. I retired my parents. I retired my in-laws. And I help out other people financially. And at the same time, I got 700% in returns this last year. And I manifested that shit because I put it out into the world and I said it would be so. And I worked to make that happen. That's how things work in life. If I could have taught the younger version of myself that, I would be a lot more successful than I am today. If there's anything I can teach you. So, hey, I'm putting this out there now. I said I was going to get a Cybertruck 45 or 4.5 years ago. That should be here in a month. That's cool. In a year, I will be ordering a Tesla Roadster. And I will work hard to be one of the first people that gets the Founders Edition too, even if I have to pay more money. And I'll show you guys what that's like when I get it, just like I will with the Cybertruck. Anyway, let's get over the rants here. You know what? I got to show you guys markets. Let me talk about markets, right? They look beautiful, by the way. Fear and Greed Index. We're still in fear. Are you guys frightened today? I'm not. Not remotely. Still in fear. Love that. Love that. So juicy right now. So juicy. My daughter says that all the time. I think that's a thing kids say now. I don't know. Anyway, I told you down when the RSI was down here at 30 that it was probably going to bounce off the 100 moving average for the S&P. And guess what? We did it. And then if I look down over here at the NASDAQ, again, it dipped underneath the 30 and it bounced higher. And we did that. We're back above the 100. It looks good. Up 1.51% on the day. I don't hate it. The Russell, good old Russell, bounced hard off the 200 moving average, like I said I wanted it to yesterday. That's great. RSI is kind of in the middle on the weekly. Doesn't really matter. I think the Russell is going to scream higher. Real quick, I got some Christian Pina, $1.99. Jesse, what bank did you get 6%? I just did it through Tesla. I just go through their thing. I paid off a bunch of credit card loans that I had 0% offers for like 18 months. I borrow against banks all the time, as long as the fee is low. I mean, I'm not going to borrow at 20%, but I'll borrow at 0% for 18 months with a 2% fee. I mean, that's like if you average that out over, the 18-month time frame, then the 2 to 3% is really like, it could be less than 2%, right? Like, that's cheap money. I'll invest that. I do that every once in a while. I mean, this is not financial advice. I would say most people would get absolutely wrecked doing this kind of stuff. I have a huge reserve. This is just me playing around and reallocating funds. But I paid off, I don't know, like $150,000 in credit cards that were 0% offers. And I popped my credit score from I think it was 600 or 580. And now it's in the 800s. I can show you guys that sometime here. So I did that in about a month. So in a month, you could bring your credit score, if you play with this stuff, you could bring it from a 580 or something like that to an 810, 820, whatever I was across my three bureaus, and then I just got the loan. So I just decided I was going to do that, and I did it real quick. And anyway, yeah, it's insanity, but yeah, if you know how to use the system, if you know how to be an opportunist with the banks, then you can do crazy stuff, man. Austin, $10. Thank you, man. I love that you say what we're all thinking. Also, please shit on GK Fund for a second on TradingView. Which one is G? Oh, Gerber Kawasaki. Oh, man, I don't need to shit on Gerber. He's an idiot. He already blocked me anyway. You don't want to hear anything from me. And I think Tesla, me, Kevin, should stop hanging out with him. I mean, I don't get me wrong, as a like human being and going out and having some drinks, I don't know, Gerber might be okay, but he can also be like, I don't know, I think I'm too alpha and he's too alpha. I think it would be a train wreck if we went to the bar together. We'd be in a fist fight by the end of it. But yeah, he's just an idiot, right? He's an emotional idiot who shouldn't be running a fund. And if you look at his fund, it's shit and has horrible returns. And he thought he could manage a fund because he made a bunch of money, but it was off this company called Tesla. He's just like Kevin Paffrath, right? Like, he's just like him, a fair weather motherfucker. But I will say this, people shit on Jeremy Lafarve all the time. Jeremy hasn't picked all the right stocks, right? Tattooed Chef, there's like Fubo, whatever. That's fucking trash, don't own that. I think he still has that play, but he's wrong. But I like Jeremy a lot. I think he's a good guy, and he provides some really good perspective on different things. I don't agree with a lot some of the thought behind his stock picks. Like 50% of those, I don't get. I don't think he's spot on. But he's a really good guy at trying to read financial statements and pouring through stuff and putting in the work, right? I don't know that I'd pay for all the courses and all that shit, but at least that guy, when Tesla was doing bad, he kept it real. He kept it real. He didn't just shit on them. He didn't start shorting the stock. He got out of it a long time ago when the PE was in the 400s. Can you blame him for that? So he might not do everything right, but there's a reason he lives in a mansion and has a bunch of Teslas, okay? So give him a little respect. The people that need to earn it are Gerber Kawasaki and me, Kevin. They're the people that need to earn it. Just don't buy other people's shit without doing your own research, and then you won't have these problems, including me, right? Like, I'm going to pitch stuff to you. Maybe like use Grok or Chat GPT and do like a fucking minute's worth of research. You know what? Ideally an hour, and figure out shit. Ask questions. Ask it hard questions. Figure stuff out. Anthony, appreciate all the help and knowledge. Guys, hey, while you're here, can you do me a favor? I am a small YouTuber. Can you and then share? If you're on X, can you share this too? I would love to get more people into this. Maybe we'll get me, Kevin, on. We can show him how things work. I'd love to see how his call's going right now. I'm sure it's a mess. I'm sure it's a mess of unhappiness. I hope he was shorting Tesla. That'd be hilarious. But But yeah, if you guys could share, that would be great, and like and stuff. That would be awesome. You'd really be helping me out. I'm going to go back over here. I'm trying to look at chat. I'm trying to get better at this stuff. I'm getting incrementally better. I've got a lot to learn, guys. You got to realize 5 months ago, I wasn't a YouTuber. So got to give me some grace, I'm very new. All right, the dollar down 0.44% today. That's a beautiful thing. We want more of that. I said that was coming. I'm happy. Oil actually got a pop today at 1.52%. I actually don't know why that is. If anybody in chat knows why that is, can you tell me? The call is coming in about 12 minutes. We'll be going up on 12 minutes. Hey guys, free memberships. Click that link and you can get a free membership to me. And then you'll be able to ask for stock requests on the daily market recap. Thank you so much for doing that, Manjinder. I really appreciate you. That's super cool, guys. God, you guys are awesome. When the Optimus talk, dude, I've got so many exciting things with Optimus. You got to realize, guys, the stack that we're using for full self-driving is the base layer for manipulating within its environment for Optimus. It's the foundation. So as it gets better and better and better, Optimus is getting smarter and smarter and smarter. And I don't know if you guys know this, but Elon said that Grok will be in Optimus and in our cars. I will be talking to Grok. I've been using Grok, the latest version, and it is awesome. I haven't even used 1.5. 1.5 will be better than ChatGPT-4 on most metrics. Can you imagine that? People were laughing at them for being behind on AI, and now they're already going to surpass ChatGPT before they get 5 out. They're going to push out a version that's better than theirs. Think about that narrative change, guys. Think about that. It's insane. But yeah, if you guys know why oil's up, let me know. The MOVE index. Again, the only thing, if you guys are new to the MOVE index, it's the volatility index for bonds, just like the VIX is for stocks. And all we want to do is see it go down because it means that there's probably less flooding into the bond market and chaos in the bond market. And when there's less chaos, I've showed this before, but this thing, when the volatility is really high, it marked the tops of everything that's happened, but going back to 2008. So this is a great indicator. When this is hitting a new all-time high, you're at a really high one. You're hitting the bottom of a market. But now that we're seeing it come back down, that's very positive for stocks, guys. You want to see that stuff. What did you say? You want me to check the call? There's the call. 10 minutes, 26 seconds. So that's the call right there. Let me see. GCT. What are you talking about, GCT? What is that? Let me get back over here. See where I was. Move. All right. I hate it when these sessions disconnect. TradingView, if you could fix that. I won't complain too much because you're giving me a free product, which, I mean, TradingView is the best charting software out there. All right. 0.2% down on gold. Gold continues to be a shitty store of value, guys. Up 21% since 2011. So that's pretty pathetic. All right, other economic data, real quick here. So I just wanted to point out, building permits did good. They beat expectations. Redbook, that's retail sales. It's like a survey of retail sales amongst the top 9,000 retail providers. It was good. We saw strong and positive new home sales that were better than expected. That's good. Again, they were forecasting 2.7% on new homes month over month. It was 8.8. So that's a good number. You can't hate that. The Richmond Fed Manufacturing Index and the Fed Manufacturing Shipments Index, they all did better than expected. In the red, but better than expected, and we can't hate that. These all actually look like they're in bottoming patterns, and that's probably why the market drove up so hard today, just so you know. All right, guys, we got less than 10 minutes now. We'll be on that conference call in a little bit. We'll switch to the main view when that comes up, just so you know. I did want to do another I Told You So because I've had so much fun with those lately. So I told you last week that the put-call ratio would plummet before the end of the month and drive markets higher. It did that. It was up here in green. There was only one other time in the history here going all the way back where we saw that. And we've wicked underneath of it and are negative now, which is great. Again, it just means the shorts are getting wiped out, guys. This is something else I want to just point out again because you guys have to understand this. If you don't understand this, You're just being dumb and ignorant, okay? Rates are coming down this year. They're probably coming down by the middle of the year. Why do I say this? Because before the pandemic, we had a manageable net interest expense of only $300 plus billion a year. Now, it's $900 billion. It's greater than Medicaid, it's greater than defense, and it's greater than Medicare. Our interest income is greater than all of our major expenditures. If we keep rates high, we're fucked. If we lower rates, we can try and make it sustainable. This is important, guys. You need to understand this. Fed watch tool? Sure, that's a thing. Let's pull it up. Let's look at it. Fed watch tool. Let's see what June looks like. And this might not have changed much yet. It's actually a little better. Almost 17% now on a cut in June. That's actually a tick better. Let's see what July looks like. July is about getting closer to 50%. Almost a 50-50. Almost a coin flip, guys. Looking a lot more realistic, isn't it? Looking a lot more realistic. Good stuff. I just don't know what to say, guys. This is also great. We're going to get back to Tesla now. Let's get over to this call. I'll rant while the call is going. Oh, nope. Is that it? No, that's not it. Let me get back over here. Where are we at? There we are. I got to make sure this looks good. I'm going to talk a little bit more, guys, but we're going to switch over here in a second, and we'll be switching our view. We'll go over to here. And so you guys will get the full screen. I might pop my little face in every once in a while, but we'll give the man and all these wonderful people that work so hard to make the world a better place and enrich all of us financially. And we'll give them plenty of time to be able to say their part. And then I'll interject every once in a while, but I'm not going to do it too often because I'll only do it if I feel like something really needs to be called out. Otherwise, we're just going to enjoy the ride, guys. I don't know what to say. It's a good day. It's a real good day. Let me do this too. I'm going to pull this over real quick. And thank you, Alejandro, for getting everything updated so quickly. So yeah, up over 10% in a day. Those calls are just going to be violent tomorrow. Probably at least a 25% gain for anybody who has some. That's what I would expect. It might go higher than that, though. Maybe 25 to 40, I would say. It'll be a good day. All right, let me look at chat while we're waiting here. Hey, Jesse, shall we take a look at GCT? Probably not. This is going to be a shitty market recap. I'm sorry, guys. For any of you guys there, I'm really going to focus on Tesla. So, and I think that's going to happen whenever there's an overlap in earnings. I'm doing a lot of earnings calls. I'm probably doing another one tomorrow with Meta. So if you guys want to join and get my take on this kind of stuff, I don't know all the companies super well, but I will work hard with you to determine, to figure it out, to get to know these companies better, to figure out where the value is, and to hopefully provide as much value to you guys as I possibly can. And again, I think making this chat members only and getting rid of all the riffraff, I don't know. What do you guys think? Your members, I think it's good. I think it's healthy. I think it's something that's helped a lot. Just in the quality of conversations that we have. I don't have some dipshit telling me I'm an idiot. Oh, hey guys. I'm going to turn off the volume real quick because I don't know if that's going to be copyright striked. So we're going to shut that just for a little bit and we'll come back to it once it's up and running. Zandy, thank you for joining, man. But yeah, so I'm so excited. I'm so excited about everything we're going to be able to provide. I'm going to be doing earnings calls probably like every day and for the next 3 weeks. So it's going to be some shitty market recaps, but I'll try and get better. I'll try and figure out the balance. I'll at least get through the macro stuff. I might not get through charts, guys, but we'll be learning a lot about earnings, and we need to understand how markets are going. All right, let me see here. So again, like if you could, share this out if you could. That would all be awesome. The call now is in 3 minutes. Lauren Wheeler, Matterport. Hey guys, for you guys that made 175 to 1,000%, I'm excited for you. Good job, guys. Intelligent computing, Paul Milligan, 6 minutes actually. Paul Milligan. Oh yeah, that was from before. John Najarian, rare form today. Man, I'm fired up, dude. I can't. I'm just so fired up. Talk about miners. Miners are going to do so well. Anybody who's in Bitcoin, miners, Tesla, ArcG, PayPal, SoFi, Hood, Square. I'm probably forgetting some. You're all going to make a lot of money. You're all going to make a lot of money. Do you use Starlink? No, Starlink isn't as good. So I did just, we have a local internet service that offers a 5 gig down and up. I can't get that with Starlink. If I had like a cabin or something or beach house or something, I'd probably use Starlink. But a 5 gig connection is what it is. I got to have that. Here, I'm going to move over while we're talking here. I don't want to miss when this comes up. But yeah, so I'm just so excited, guys. I'm so excited. Yeah, we're going to make so much money, guys. It's going to be stupid. Members only chat is good. Yeah, it is, right? Never in my life would I have thought to be excited for financial statements. Seems boring to most, but I love learning. Dude, I will help you learn. I love it too. I used to think that earnings calls were the most boring shit, but I don't know if you know this about me. I'm not a super boring person. I'm a little insane, hopefully in a good way. And I'll make it interesting. I will definitely give you my thoughts, whether you like it or not. You'll get them. That's all I got, man. That's all I know, guys. Austin, it's great. Intelligent Computing, agreed. Member only chat for earnings and market recaps, 100%. I have a hard time. I figure it's $2.99 a month and you help support this work. I'll be able to hire more people. I'll be able to do what James does, but I won't need a Discord or a Patreon. Like, we're just doing this here, guys. And if something like that becomes helpful to you guys, then you know what I'll do? You'll get that stuff if you're a member here. You'll just get it. Oh, I think we're up. Nope. Okay. But yeah, you'll just get that shit. I won't charge you more for it. I'm not going to do that. My word. All right, Alex Garcia, you listed everything I own. Yeah, dude, that's awesome. You're going to get rich thing, Alex. Young Dave, wish I had my bingo and a card ready for this. Penny-san, hey, Jesse, what's your average cost for your Tesla calls? I'm actually, whoa, wait a second. Okay, nope, that's not happening. I don't know off the top of my head. I think I was down 30% today on them. So I was in the red. But by tomorrow morning, I should be in the black. So, I don't know. We'll see. It's high, though. It's like, for the calls, I actually do think I know this. I think it's like $20. I think it's like $20 for the June 2026 330s. That's my average. So anybody who is buying lower than that has done a better job than me. So congrats, guys. And I hope a bunch of you did. That's what I was trying to do. I was trying to get it to where you guys could benefit from it. Just like with Matterport, right? Yeah, and Cantonese Cat's great. I love his little cat video things. Wish I had my bingo card ready for this. Right? Dude, I've already filled out the bingo card, I think. Penny-san, hey, Jesse, what's your average cost? Okay, that was that one. TFB, yes, Matter. Cantonese Cat got me on that one, but Jesse validated it for me, 300%. Congrats, dude. All right, I'm just checking over here, guys. Nope. Yeah, sold all my Meta earnings report tomorrow. Yeah, I'll be doing the Meta earnings report tomorrow, guys. I'll get that stuff spun up. If you guys like watching earnings reports with me, let's kick ass and learn together. Which state am I in? I don't like to disclose that. I kind of want to be like pseudo-anonymous right now. I already give my name. And I had some weird motherfuckers. So here's the deal. You guys might not know this. On X, somebody thought I was a fraud. Like, there's a bunch of people who probably do, right? Whatever. I show all my shit. I don't know how you can think I'm a fraud. I literally show you my fucking trades every day and show you my portfolio every day. But anyway, so somebody thought I was a fraud, and they found my wife on Facebook and messaged her on a Friday night when we were having a campfire. Oh, hey, we're getting started. I'll tell you more later.
And I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q1 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Martin. So to recap, in Q1, we navigated several unforeseen challenges, as well as the ramp for the updated Model 3 in Fremont. There was, as people have seen, the EV adoption rate globally is under pressure, and a lot of other auto manufacturers are pulling back on EVs and pursuing plug-in hybrids instead. We believe this is not the right strategy, and electric vehicles will ultimately dominate the market. Despite these challenges, the Tesla team did a great job executing in a tough environment, and energy storage deployments, the Megapack in particular, reached an all-time high in Q1, leading to record profitability for the energy business. And that looks likely to continue to increase in the quarters and years ahead. It will increase. We actually know.
I'm sorry. I just got to point out the fact that Elon totally baited all these people. He figured out who his friends were very clearly again, and he baited all these shorts.
It will. Significantly faster than the car business, as we expected. We also continue to expand our AI training capacity in Q1, more than doubling our training compute sequentially. In terms of the new product roadmap, there's been a lot of talk about our upcoming vehicle line in the past several weeks. We've updated our future vehicle lineup to accelerate the launch of new models ahead of previously mentioned start of production in the second half of 2025. So we expect it to be more like the early 2025, if not late this year.
Wow.
These new vehicles, including more affordable models.
Did he say late this year? Did I hear that right? What? Thanks for joining, Brad.
Will use aspects of the next generation platform, as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup. So it's not contingent on any new factory or massive new production line. It'll be made on our current production lines much more efficiently. And we think this should allow us to get to over 3 million vehicles of capacity when realized to the full extent. Regarding FSD version 12, which is the pure AI-based self-driving, people that if you haven't experienced this, I strongly urge you to try it out. It's profound, and the rate of improvement is rapid. So we've now turned that on for all cars with the cameras and inference computer and everything from hardware 3 on in North America. So it's been pushed out to, I think, around 1.8 million vehicles. And we're seeing about half of people use it so far, and that percentage is increasing with each passing week.
What?
So we now have over 300 billion miles that have been driven with FSD V12. Since the launch of full self-driving, supervised full self-driving, it's become very clear that the vision-based approach with end-to-end neural networks is the right solution for scalable autonomy. And it's really how humans drive. Our entire road network is designed for biological neural nets and eyes. So naturally, cameras and digital neural nets are the solution to our current road system. To make it more accessible, we've reduced the subscription price to $99 a month, so it's easy to try out. And as we've announced, we'll be showcasing our purpose-built robotaxi or cybercab in August.
Oh, yes.
Yeah. Regarding AI compute, over the past few months, we've been actively working on expanding Tesla's core AI infrastructure. For a while there, we were training constrained in our progress. We are, at this point, no longer training constrained, and so we're making rapid progress. We've installed and commissioned, meaning they're actually working, 35,000 H100 computers, or GPUs. GPU is the wrong word. They need a new word. I always feel like a wince when I say GPU because it's not GPU stands for G stands for graphics and doesn't do graphics. But anyway, roughly 35,000 H100s are active, and we expect that to be probably 85,000 or thereabouts by the end of this year.
Sorry to interrupt. It was 1.8 million people tried full self-driving. 900,000 seem to be sticking around. If those people subscribed and or bought, if they haven't already, we could see Q2 earnings, Q3 earnings that are insane.
Training, just for training. We're making sure that we're being as efficient as possible in our training. It's not just about the number of H100s, but how efficiently they're used. So in conclusion, we're super excited about our autonomy roadmap. I think it should be obvious to anyone who's driving version 12 in a Tesla that is only a matter of time before we exceed the reliability of humans, and not much time at that. And we're really headed for an electric vehicle, an autonomous future. And I'll go back to something I said several years ago, that in the future, gasoline cars that are not autonomous will be like riding a horse and using a flip phone. And that will become very obvious in hindsight. We continue to make the necessary investments that will drive growth and profits for Tesla in the future. And I wanted to thank the Tesla team for incredible execution during this period, and look forward to everything that we have planned ahead. Thanks.
Thank you very much. And Vaibhav has some comments as well.
Thanks. It's important to acknowledge what Elon said. From our auto business perspective, we did see a decline in revenues quarter over quarter, and those were primarily because of seasonality, uncertain macroeconomic environment, and the other reasons which Elon had mentioned earlier. Auto margins declined from 18.9 to 18.5%, excluding the impact of Cybertruck. The impact of pricing actions was largely offset by reductions in per unit cost and the recognition of revenue from auto park feature for certain vehicles in the US that previously did not have that functionality. Additionally, while we did experience higher costs due to the ramp of Model 3 in Fremont and disruptions in Berlin, these costs were largely offset by cost reduction initiatives. In fact, if we exclude Cybertruck and Fremont Model 3 ramp costs, the revenue from auto park, auto margins improved slightly. Currently, normalized Model Y cost per vehicle in Austin and Berlin are already very close to that of Fremont. Our ability to reduce costs without sacrificing on quality was due to the amazing efforts of the team in executing Tesla's relentless pursuit of efficiency across the business. We've also witnessed that as other OEMs are pulling back on their investments in EV, there is increasing appetite for credits, and that means a steady stream of revenue for us. Obviously, seeing others pull back from EV is not the future we want. We would prefer it the whole industry went all in. On the demand front, we have undertaken a variety of initiatives, including lowering the price of both the purchase and subscription options for FSD, launching extremely attractive leasing specials for the Model 3 in the US for $299 a month, and offering attractive financing options in certain markets. We believe that our awareness activities paired with attractive financing will go a long way in expanding our reach and driving demand for our products. Our energy business continues to make meaningful progress with margins reaching a record of 24.6%. We expect the energy storage deployments for 2024 to grow at least 75% higher from 2023. And accordingly, this business will begin contributing significantly to our overall profitability. Note that there is a bit of lumpiness in our storage deployments due to a variety of factors that are outside of our control, so deployments may fluctuate quarter over quarter. On the operating expense front, we saw a sequential increase from our AI initiatives, continued investment in future projects, marketing, and other activities. We had negative free cash flow of $2.5 billion in the first quarter. The primary driver of this was an increase in inventory from a mismatch between builds and deliveries, as discussed before, and our elevated spend on CapEx across various initiatives, including AI compute. We expect the inventory build to reverse in the second quarter and free cash flow to return to positive again. As we prepare the company for the next phase of growth, we had to make the hard but necessary decision to reduce our headcount by over 10%. The savings generated are expected to be well in excess of $1 billion on an annual run rate basis. We are also getting hyper-focused on CapEx efficiency and utilizing our installed capacity in a more efficient manner. The savings from these initiatives, including our cost reductions, will help improve our overall profitability and ultimately enable us to increase the scale of our investments in AI. In conclusion, the future is extremely bright, and the journey to get there, while challenging, will be extremely rewarding. Once again, I would like to thank the whole Tesla team for delivering great results, and we can open it up to Q&A.
Thank you. Okay, let's start with investor Q&A. The first question is, what is the status of 4680? What is the current output? Lars?
Sure. 4680 production increased about 18-20% over from Q4, reaching greater than 1K a week for Cybertruck, which is about 7 gigawatt hours per year, as we posted on X. We expect to stay ahead of the Cybertruck ramp with the cell production throughout Q2 as we ramp the third of 4 lines in phase 1, while maintaining multiple weeks of cell inventory to make sure we're ahead of the ramp. Because we're ramping, COGS continues to drop rapidly week over week, driven by yield improvements throughout the lines and production volume increases. So our goal, and we expect to do this, is to beat supplier costs of nickel-based cells by the end of the year.
Thank you. The second question is on Optimus. So what is the current status of Optimus? Are they currently performing any factory tasks? When do you expect to start mass production?
We are able to do simple factory tasks, or at least I should say factory tasks in the lab. In terms of actually, we do think we will have Optimus in limited production in the factory, in the actual factory itself, doing useful tasks before the end of this year. And then I think we may be able to sell it externally by the end of next year. These are just guesses.
What?
As I've said before, I think Optimus will be more valuable than everything else combined.
Did he say externally in 2025? What the fuck? What the actual fuck?
Because if you've got a sentient humanoid robot that is able to navigate reality and do tasks at request, there is no meaningful limit to the size of the economy. So that's.
Do you hear that, guys? He's gonna fix the problems that all the politicians have been put on us with massive debts, money printing out the wazoo, and a completely unsustainable GDP to debt rate, right? Elon's just gonna fix that. He's gonna print the GDP for us. So that's cool.
So that's what's going to happen.
That's what's going to happen.
And I think Tesla is best positioned of any humanoid robot maker to be able to reach volume production with efficient inference on the robot itself. This perhaps is a point that is worth emphasizing. Tesla's AI inference efficiency is vastly better than any other company. No, there's no company even close to the inference efficiency of Tesla.
No company is as close as Tesla. Nobody's even close. Elon doesn't lie. I don't know if you realize that. Elon does not lie. You need to understand this. This is what you should own.
We've had to do that because we were constrained by the inference hardware in the car. We didn't have a choice. But that will pay dividends in many ways.
Thank you. The third question is, what is Tesla's current assessment of the pathway towards regulatory approval for unsupervised FSD in the US? And how should we think about the appropriate safety threshold compared to human drivers?
Sure. I can start. There are a handful of states that already have adopted autonomous vehicle laws. These states are paving the way for operations, while the data for such operations guides a broader adoption of driverless vehicles. I think Ashok can talk a little bit about our safety methodology, but we expect that these states and the work ongoing, as well as the data that we're providing, will pave the way for a broad-based regulatory approval in the U.S. at least, and then other countries as well.
Yeah. It's actually been pretty helpful that other autonomous car companies have been cutting a path through the regulatory jungle. That's actually quite helpful. And they have obviously been operating in San Francisco for a while. I think they got approval for City of LA. So these approvals are happening rapidly. I think if you've got at scale a statistically significant amount of data that shows conclusively that the autonomous car has, let's say, half the accident rate of a human-driven car, I think that's difficult to ignore, because at that point, stopping autonomy means killing people. So I actually do not think that there will be significant regulatory barriers provided there is conclusive data that the autonomous car is safer than a human-driven car. And in my view, this will be much like elevators. Like, elevators used to be operated by a guy with a relay switch, but sometimes that guy would get tired or drunk or just make a mistake and shear somebody in half between floors. So now we just get in an elevator and press a button. We don't think about it. In fact, it's kind of weird if somebody's standing there with a relay switch.
Real quickly, we're up almost 13% since this morning.
That'll be how cars work. You just summon a car using your phone. You get in, it takes you to a destination, you get out.
You don't even think about it.
You don't even think about it. Just like an elevator. It takes you to your floor. That's it. Don't think about how the elevator is working or anything like that. Now, something I should clarify is that Tesla will be operating the fleet. So you can think of like how Tesla, think of Tesla like, I don't know, some combination of Airbnb and Uber, meaning that, there'll be some number of cars that Tesla owns itself and operates in the fleet. There'll be some number of cars, and then there'll be a bunch of cars where they're owned by the end user, but that end user can add or subtract.
We're pushing towards 14%.
Their car to the fleet whenever they want. And they can decide if they want to only let the car be used by friends and family, or only by 5-star users, or by anyone. And at any time, they could have the car come back to them and be exclusively theirs, like an Airbnb. You could rent out your guest room or not anytime you want.
Yeah, I'm going to be doing all that with my Roadster, my Cybertruck, and my Model Y. Probably get a Model 2 for the kid.
As our fleet grows, we have 7 million cars, 9 million cars, eventually tens of millions of cars worldwide. With a constant feedback loop, every time something goes wrong, that gets added to the training data, and you get this training flywheel happening in the same way that Google search has the sort of flywheel. It's very difficult to compete with Google because people are constantly doing searches and clicking, and Google's getting that feedback loop. It's the same with Tesla, but at a scale that is maybe difficult to comprehend, but ultimately be tens of millions. I think there's also some potential here for an AWS element down the road, where if we've got very powerful inference, because we've got a hardware 3 in the cars, but now all cars are being made with hardware 4. Hardware 5 is pretty much designed and should be in cars hopefully towards the end of next year. And there's a potential to have to run when the car is not moving to actually run distributed inference. So kind of like AWS, but with distributed inference. Like it takes a lot of computers to train an AI model, but many orders of magnitude less compute to run it. So if you can imagine a future perhaps where there's a fleet of 100 million Teslas, and on average they've got like maybe a kilowatt of inference compute, that's 100 gigawatts of inference compute distributed all around the world.
What?
It's pretty hard to put together 100 gigawatts of AI compute. And even in an autonomous future where the car is perhaps used, instead of being used 10 hours a week, is used 50 hours a week, that still leaves over 100 hours a week where the car inference computer could be doing something else. And it seems like it would be a waste not to use it.
Asher, do you want to chime in on peer process and safety?
Yeah, we have like multiple tiers of validating the safety. For like in any given week, we train hundreds of neural networks that can produce different trajectories for how to drive the car. We replay them through the millions of clips that we have already collected from our users and our own QA. Those are like critical events, like someone jumping out in front, or like other critical events that we have gathered a database over many, many years. And we replay through all of them to make sure that we are net improving safety. And on top of it, we have simulation systems that also try to recreate this and test this in closed loop fashion. Once all of this is validated, we give it to our own QA drivers. We have hundreds of them in different cities, in San Francisco, Los Angeles, Austin, New York, a lot of different locations. They are also driving this and collecting real world miles. And we have an estimate of what are the critical events, are they a net improvement compared to the previous week's builds. And once we have confidence that the build is a net improvement, then we start shipping to early users, like 2,000 employees initially, that they would like get the build. They would give feedback on like if it's an improvement or are they noticing some new issues that we did not capture in our own QA process. And only after all of this is validated, then we go to external customers. And even when we go external, we have like live dashboards of monitoring every critical event that's happening in the fleet, sorted by the criticality of it. So we are having a constant pulse on the build's quality and the safety improvement along the way. And then any failures, like Elon alluded to, you get the data back, add it to the training, and that improves the model in the next cycle. So we have this like constant feedback loop of issues, fixes, evaluations, and then it rinse and repeat. And especially with the new V12 architecture, all of this is automatically improving without requiring much engineering interventions, in the sense that engineers don't have to be creative in like how they code the algorithms. It's mostly learning on its own based on data. So you see that, okay, we failed here, or like this is how a person shows, this is how you drive this intersection or something like that. We get the data back, we add it to the neural network, and it learns from that training data automatically, instead of some engineers saying that, oh, here you must rotate the steering wheel by this much or something like that. There's no hard if-else conditions. It's everything is neural network. It's very soft. It's probabilistic. So it will adapt its probability distribution based on the new data that it's getting.
Yeah, and we do have some insight into how good the things will be in, like, let's say 3 or 4 months, because we have advanced models that are far more capable than what is in the car, but have some issues with them that we need to fix. So there'll be a step change improvement in the capabilities of the car, but it'll have some quirks that are that need to be addressed in order to release it. As Ashok was saying, we have to be very careful in what we release to the fleet or to customers in general. So like if we look at say 12.4 and 12.5, which are really could arguably even be version 13 and version 14, because it's pretty close to a total retrain of the neural nets in each case, or substantially different. So we have good insight into where the models, how well the car will perform in say 3 or 4 months.
Yeah. In terms of like scaling laws, people in the AI community generally talk about model scaling laws, where they increase the model size a lot, and then they have corresponding gains in performance. But we have also figured out scaling laws in other axes. In addition to the model size scaling, we can also have data scaling. You can increase the amount of data you use to train the neural network, and that also gives similar gains. and you can also scale up by training compute. You can train it for much longer and get more GPUs or more Dojo nodes, and that also gives better performance. And you can also have architecture scaling where you come up with better architectures that for the same amount of compute produce better results. So a combination of model size scaling, data scaling, training compute scaling, and the architecture scaling, we can basically extrapolate, okay, if we continue scaling based on this ratio, we can sort of predict future performance. Obviously, it takes time to do the experiments because it takes few weeks to train. It takes few weeks to collect tens of millions of video clips and process all of them. But you can estimate what's going to be the future progress based on the trends that we have seen in the past, and they've generally held true based on the past data.
Okay, thank you very much. Let's go to the next question, which is, can we get an official announcement of the timeline for the $25,000 vehicle?
Ooh.
I think Elon mentioned it in the opening remarks, but
2024.
As you mentioned, we're updating our future vehicle lineup to accelerate the launch of our low-cost vehicles in a more CapEx efficient way. That's our mission, to get the most affordable cars to customers as fast as possible. These new vehicles will be built on our existing lines and open capacity, and that's a major shift, to utilize all our capacity with marginal CapEx before we go spend high CapEx to do anything.
Yeah, we'll talk about this more on August 8th. But really the way to think of Tesla is almost entirely in terms of solving autonomy and being able to turn on that autonomy for a gigantic fleet. And I think it might be the biggest asset value appreciation in history when that day happens, when you can do it.
There are 6 million Tesla cars on the road. There's going to be over 8 million by the end of this year.
Unsupervised, full self-driving.
5 million cars.
Imagine what happens if a third of them, of 8 million cars, end up paying $100 a month.
Yeah.
Oh, a little less.
Well,
Some of those have, yeah.
It'll be 7 million cars, in a year or so. And then 10 million. And
that makes sense. So he's saying in a year, 7 million that will be capable of it because the other ones are probably running older version of hardware. So I was off by a mil. My bad.
And eventually we're talking about tens of millions of cars. Not eventually, it's like before the end of this decade. Yeah, before the end of the decade, it's several tens of millions of cars, I think.
Thank you. The next question is, what is the progress of Cybertruck ramp?
I can take that one too. Cybertruck hit 1K a week just a couple weeks ago. This happened in the first 4 to 5 months since we SOP'd late last year. Of course, volume production is what matters. That's what drives costs, and so our costs are dropping. But the ramp still faces a lot of challenges with so many new technologies, some supplier limitations, et cetera, and we'll continue to ramp this year, just focusing on cost efficiency and quality.
Okay, thank you. The next question, have any of the legacy...
I did some quick math. If Tesla a year from now gets a third of these vehicles to subscribe for $100 a month, maybe it's lower than that, they would get almost $1 billion in additional revenue a quarter. So $4 extra billion a quarter, and almost all of it would be like 97% gain, like no cost.
Automakers contacted Tesla about possibly licensing FSD in the future.
We're in conversations with one major automaker regarding licensing FSD.
Thank you. The next question is about the robotaxi unveil. Elon already talked about that, so we'll have to wait till August. The following question is about the next generation vehicle. We already talked about that. So let's go to the Semi. What is the timeline for scaling Semi? I think
sure. So we're finalizing the engineering of the Semi to enable a super cost-effective, high-volume production with our learnings from our fleet and our pilot fleet and Pepsi's fleet, which we're expanding this year marginally. In parallel, as we showed in the shareholders deck, we have started construction on the factory in Reno. Our first vehicles are planned for late 2025 with external customers starting in 2026.
Okay, a couple more questions. So our favorite, can we make FSD transfer permanent until FSD is fully delivered with level 5 autonomy?
No.
Okay. Next question. What is gating the production ramp at Lathrop? Where do you see the megapack run rate at the end of the year? Mike?
Yeah, Lathrop is ramping as planned. We have our second GA line allowing us to increase our exit rate from 20 gigawatt hours per year to, at the start of this year, to 40 gigawatt hours per year by the end of the year. That line's commissioned. There's really nothing limiting the ramp. It's given the longer sales cycles for these large projects, we typically have order visibility 12 to 24 months prior to ship dates. So we're able to plan the build plan several quarters in advance. So this allows us to ramp the factory to align with the business and order growth. Lastly, we'd like to thank our customers globally for their trust in Tesla as a partner for these incredible projects.
Okay, thank you very much. Let's go to analyst questions. The first question comes from Tony Sacconaghi from Bernstein. Tony, please go ahead and unmute.
Thank you for taking the question. I was just wondering.
Yeah, thanks as always, Intelligent Computing. Yeah, Jeremy Straubel from Redwood Materials. That's the company he created. Jeremy was a great guy who helped the company a ton. Or Jeremy, I don't remember his first name. But he was brilliant, and he helped the company grow massively. And Tesla's doing their own recycling program too. It's a small scale thing, but they're recycling vehicles. So they're going to be involved in that, and they'll probably do business with Redwood too. He's a friend.
If you could elaborate a little bit more on kind of the new vehicles that you.
I just want to say I told you so again. Because everybody, when 95% of Tesla investors are telling you that they're going to buy after the earnings call, you fucking buy before it. Just remember that, okay? I don't want to have to repeat myself again in the future, but you know me, I will.
Talked about today, are these like tweaks on existing models, given that they're going to be running on the same lines, or are these like new models? Yes. And how should we think about them?
Yes, he already said that.
In the context of like the Model 3 Highland update, what will these models be like relative to that? And given the quick time frame, Model 3 Highland has required a lot of work and a lot of retooling. Maybe you can help put that all in context. Thank you. And I have a follow-up, please.
I think we've said all we will on that front. So what's your follow-up?
It's a more personal one for you, Elon, which is that you're leading many important companies right now. Maybe you can just talk about where your heart is at in terms of your interests, and do you expect to lessen your involvement with Tesla at any point over the next 3 years?
Well, Tesla constitutes the majority of my work time, and I work pretty much every day of the week. It's rare for me to take a Sunday afternoon off. I can make sure Tesla is quite prosperous, and I think it is prosperous, and it will be very much so in the future.
Okay, thank you. Let's go to Adam Jonas from Morgan Stanley. Adam, please go ahead and unmute.
Okay, great. Hey, Elon. So you and your team on volume expect a 2024 growth rate notably lower than that achieved in 2023. But what's your team's degree of confidence on growth above 0%? Or in other words, does that statement leave room for potentially lower sales year on year?
No, I think we'll have higher sales this year than last year.
Okay. My follow-up, Elon, on future product. If you had nailed execution, assuming that you nail execution on your next gen cheaper vehicles, more aggressive gigacastings, I don't want to say one piece, but getting closer to one piece, structural pack, unboxed, 300-mile range, $25,000 price point. Putting aside robotaxi, those features unique to you, how long would it take your best Chinese competitors to copy a cheaper and better vehicle that you could offer a couple of years from now? How long would it take your best Chinese competitors to copy that? Thanks.
Weird question.
I mean, I don't know what our competitors can do, except we've done relatively better than they have. If you look at the drop in our competitors in China's sales versus our drop in sales, our drop was less than theirs. So we're doing well. I think Kathy Wood said it best. Like, really, we should be thought of as an AI robotics company. If you value
Here's the thing I love about Elon, his loyalty towards people. Kathy Wood stands by him. She was just getting shit on today on CNBC because her funds were doing so good years ago in 2021 and they've been destroyed. And she has stayed on point, stayed on message. Last night, I think, bought like 120,000 shares or something of Tesla. And she's been loyal to this man because she knew his vision was pure and that he was telling the truth and that these things were happening. And she could see it too. And now he's giving her credit. Now on CNBC, they're going to be bringing on fucking Kathy Wood all the time. Mark my words.
Tesla as just like an auto company, you just have to fundamentally, it's just the wrong framework. And it will come to, if you ask the wrong question, then the right answer is impossible. So, I mean, if somebody doesn't believe Tesla's going to solve autonomy, I think they should not be an investor in the company. Like that is, but we will, and we are. And then you have a car that goes from 10 hours of use a week, like an hour and a half a day, to probably 50, but it costs the same.
I think that's the key thing to remember, right? Especially if you look at FSD supervised. If you didn't believe in autonomy, they should give you a preview that this is coming. It's actually getting better day by day.
Yeah, if you've not tried the FSD 12.3, and like I said, 12.4 is going to be significantly better, and 12.5 even better than that, and we have visibility into those things, then you really don't understand what's going on. It's not possible.
Yeah, and that's why we can't just look at just as a car company, because a car company would just have a car. But here we have more than a car company because the cars can be autonomous. And like I said, it's happening.
Yeah, this is all in addition to Tesla. The overall AI community is just like improving rapidly.
Heinz, I totally agree. Today is the day that Tesla became an AI company. Is it? This is the moment.
Yeah. I mean, we're putting the actual auto in automobile. So, so sort of a lot of it be like, well, sort of like, tell us about future horse carriages you're making. I'm like, well, actually, it doesn't need a horse. That's the whole point. And that's really.
He's tell us about the cars or the horses and the horse carriages.
The whole point.
Okay, thank you. The next question comes from Alex Potter from Piper Sandler. Alex, please go ahead and unmute.
Great, thanks. So couldn't agree more. The thesis hinges completely on AI, the future of AI, full self-driving, neural net training, all of these things. In that context, Elon, you've spoken about your desire to obtain 25% voting control of the company, and I understand completely why that would be. So I'm not necessarily asking about that. I'm asking if you've come up with any mechanism by which you can ensure that you'll obtain that level of voting control, because if not, then the core part of the thesis could potentially be at risk. So any additional commentary you might have on that topic?
Well, I think no matter what, Tesla, even if I got kidnapped by aliens tomorrow, Tesla will solve autonomy, maybe a little slower, but it would solve autonomy for vehicles at least. I don't know if it would win on with respect to Optimus or with respect to future products. But it would. There's enough momentum for Tesla to solve autonomy, even if I disappeared for vehicles. Now, there's a whole range of things we can do in the future beyond that. I'd be more reticent with respect to Optimus. If we have a super sentient humanoid robot that can follow you indoors and that you can't escape, we're talking Terminator level risk, then I'd be uncomfortable with if there's not some meaningful level of influence over how that is deployed. If there's shareholders have an opportunity to ratify or re-ratify the sort of competition, I guess I can't say that.
There is no fucking way that shareholders don't ratify it now. There's no fucking way. The conversation's over. I'm not even talking about it anymore.
But that is a fact. They have an opportunity.
Okay. Very good.
And we'll see. If the company generates a lot of positive cash flow, we could obviously buy back shares.
All right. That's actually all very helpful context. Thank you. Maybe one final question, then I'll pass it on. OpEx reductions. Thank you for quantifying the impact there. I'd be interested also in potentially more qualitative discussion of what the implications are for these headcount reductions. What are the types of activities that you're presumably sacrificing as a result of parting ways with these folks? Thanks very much.
So, like we said, we've done these headcount reductions across the board. And, as companies grow over time, there are certain redundancies, there's some duplication of efforts which happens in certain areas. So you need to go back and look at where all these pockets are, get rid of it. So we're basically going through that exercise wherein we're like, hey, how do we set this company right for the next phase of growth? And the way to think about it is, any tree which grows, it needs pruning. This is the pruning exercise which we went through. And at the end of it, we'll be much stronger and much more resilient to deal with the future, because the future is really bright, like I said in my opening remarks. We just have to get through this period and get there.
Yeah, we're not giving up anything that it's significant that I'm aware of. So we've had a long period of prosperity from 2019 to now, and so if a company sort of organizationally is 5% wrong per year, that accumulates to 25-30% of inefficiency. We've made some corrections along the way, but it is time to reorganize the company for the next phase of growth. And you really need to reorganize it, just like a human. When we start off as one cell and become a zygote and blastocyst, and you start growing arms and legs, and briefly you have a tail. And so.
But you shed the tail.
You shed the tail, hopefully, and then you're a baby, and you basically you have to be different. The organism, a company is kind of like a creature growing, and if you don't reorganize it for different phases of growth, it will fail. You can't have the same organizational structure if you're 10 cells versus 100 versus 1 million versus a billion versus a trillion. Where humans are like around 35 trillion cells. Doesn't feel like it feels like like one person, but you're basically a walking cell colony of roughly 35 trillion, depending on your body mass, and about 3 times that number in bacteria. So anyway, you've got to reorganize the company for a new phase of growth, or it will fail to achieve that growth.
Thank you. Let's go to Mark Delaney from Goldman Sachs. Mark, please go ahead and unmute.
Yes, good afternoon. Thanks very much for taking the question. The company had previously characterized potential FSD licensing discussions as in the early phase, and some OEMs had not really been believing in it. Can you elaborate on how much the licensing business opportunity you mentioned today has progressed? And is there anything Tesla needs to achieve with the technology in terms of product milestones in order to be successful at reaching a licensing agreement, in your view?
Well, I think it just needs to be obvious that our approach is the right approach. And I think it is. I think we're now with 12.3. If you just have the car drive you around, it is obvious that our solution, with a relatively low cost inference computer and standard cameras, can achieve self-driving. No LiDARs, no radars, no ultrasonics, nothing. It's just
no heavy integration work for vehicle manufacturers.
Yeah, it's so it really just be a case of having them use the same cameras and inference computer and licensing our software. And but it's once it becomes obvious that if you don't have this in a car, nobody wants your car. Yeah, it's a smart car. I still remember back when Nokia was king of the hill. Yeah, crushing. And I saw them come out with a smartphone that was basically a brick with limited functionality. And then the iPhone and Android. But people still do not understand that all the phones are going to be that way. There's not going to be any flip phones. Like, that will be a niche product.
Or home phone.
Yeah, not even exactly. When was the last time you saw a home phone?
I have no idea.
Yeah.
In a hotel. Sometimes in a hotel.
Yeah, the hotels have them. Yeah. So the people don't understand, all cars will need to be smart cars, or you will not sell. The car will not. Nobody will buy it. Once that becomes obvious, I think licensing becomes not optional.
Becomes a method of survival.
Yeah, so it's license it, or nobody will buy your car.
I mean, one other thing which I'll add is, in the conversations which we've had with some of these OEMs, I just want to also point out that they take a lot of time in their product life cycle.
Yeah.
They're talking about years before they will, put it in their product. We might have a licensing deal earlier than that, but it takes a while. So this is where the big difference between us and them is, right?
Yeah, I mean, really, a deal signed now would result in it being in a car in probably 3 years.
Mm-hmm. That would be early.
Yeah, that's like lightning, basically. So
that's being an eager OEM.
Yeah. So, I mean, I wouldn't be surprised if we do sign a deal. I think we've good chance we do sign a deal this year. maybe more than one. But yeah, it would be probably 3 years before it's integrated with the car, even though all you need is cameras and power endurance computer. So it's like not a massive design change.
Yeah, and again, just to clarify, it's not the work which we have to do, it's the work which they have to do, which will take the time.
Right, Mark, do you have a follow-up?
Yeah, very helpful. Thank you. My follow-up was to better understand Tesla's approach to pricing going forward. Previously, the company had said that the price reductions were driving incremental demand. With how affordable the cars have become, especially for vehicles that have access to IRA credits and some of the leasing offers that Tesla has in place, do you still see meaningful incremental price reductions as making sense from here for the existing products? And can the company meaningfully lower prices from here and also stay free cash flow positive on an annual basis with the current product set? Thanks.
Yeah, I think we can be free cash flow positive meaningfully. Yeah.
I think Vaibhav said it in his opening remarks, like our cost down efforts, we basically were offsetting the price cuts.
That's what I was going to say.
Goal. Like we're trying to give it back to the customers.
Yeah, I mean, at the end of the day, like for any given company, if you sell a great product at a great price, if you have a great product at a great price, the sales will be excellent. That's true of any arena. So over time, we do need to keep making sure that it's a great product at a great price, and moreover, that price is accessible to people. So it's not, you have to solve both the value for money and the fundamental affordability question. The fundamental affordability question is sometimes overlooked. If somebody's earning several $100,000 a year, they don't think of a car from a fundamental affordability standpoint. But from the vast majority of people are living paycheck to paycheck. So it actually makes a difference if the cost per month for lease or financing is $10 one way or the other. So it is important to keep improving the affordability and to keep, it's just like making the price more accessible. Yeah, exactly. Make the price more accessible, the value for money better, and to keep improving that over time.
But also make it kick-ass cars if people want to buy.
Yeah, it's got to be a great product at a great price, and the standards for what constitutes a great product at a great price keep increasing. So there's like you can't just be static. You have to keep making the car better, improving the price of it, improving the cost of production, and that's what we're doing.
Yeah, and in fact, like I said in my opening remarks, also like the updated Model 3 is a fantastic car. I don't think people fully even understand the amount of engineering effort which has gone, and Lars and team have actually put out videos explaining how much the car is different. I mean, it looks and feels different. Not only it looks and feels different, we've added so much value to it, but you can lease it for like as low as $299 a month.
Yeah, without gas.
Yeah.
Right. The next question comes from George from Canaccord. George, please go and unmute.
Hi. Thank you for taking my question. First, could you please help us understand maybe some of the timing of launching FSD in additional geographies, including maybe clarifying your recent comment about China? Thank you.
You mean like new markets? Yeah, there are a bunch of markets where we don't currently sell cars that we should be selling cars in. We'll see some acceleration of that.
And FSD new markets?
Yeah. So the thing about the end-to-end neural net-based autonomy is that just like a human, it actually works pretty well without modification in almost any market. So we plan on, with the approval of the regulators, releasing it as a supervised autonomy system in any market where we can get regulatory approval for that, which we think includes China. So yeah, it's just like a human, you can go rent a car in a foreign country and you can drive pretty well. Obviously, if you live in that country, you'll drive better.
All right, I got to say this. Todd Gleason. I remember leasing a shitty, by comparison, Saturn over 25 years ago for close to what you can get a Model 3 lease for now. After inflation, that's freaking insane. Agreed. And you're right, Uber and Lyft, I'm glad to see their stocks go down. They should. I was saying this a week ago, 2 weeks ago. I've been saying it for a long fucking time to whoever will listen. They're dead. Those companies are dead. If they're smart, they'll try and piggyback in some fucking way, but they're probably just dead.
Better, and so we'll make car drive better in these other countries with country-specific training, but it can drive quite well almost everywhere.
Yeah, the basics of driving are basically the same everywhere. Like, a car is a car, traffic is a traffic light, road is a road. It's like,
yeah, it understands that it shouldn't hit things no matter where it is.
Exactly. There are some road rules that you need to follow. In China, you shouldn't cross over a solid line to do a lane change. US is a recommendation, I think. China, you get fined heavily if you do that. We have to do some adaptations, but it's mostly smaller adaptations, not like an entire change of stack or something like that.
Yeah.
Hey, George, do you have a follow-up?
Yep. So my follow-up has to do with the first quarter deliveries, and I'm curious as to whether or not you feel that supply constraints that you mentioned throughout the release impacted the results, and maybe can you help us quantify that, and is that why you have some confidence in unit growth in 2024?
Yeah, think we did cover this a little bit in the opening remarks too. Q1 had a lot of different things which were happening. Seasonality was a big one. Continued pressure from the macroeconomic environment. We had attacks at our factory. We had Red Sea attacks. We were ramping model.
That's not me, I don't think. Did Elon just go all weird? That's fucked up. Let me hit the button again. What is happening? Weird. That's super strange. I don't think that's me. I'm going to try and refresh. Hopefully I don't lose my place. What is happening? This is the weirdest fucking conference call I've ever been on. What is going on? Okay. 1 second. I'm going to turn it to 1 just to make sure that the speed isn't doing anything with it. I'm going to refresh again.
Just in the past week or so, have greatly simplified. So it became far too complex to buy a Tesla.
That's so strange.
Whereas it should just be you can buy the car in under a minute. So we're getting back to the you can buy a Tesla in under a minute interface from what was quite complex.
Okay, thank you. Let's go to Colin Rush from Oppenheimer. Colin, go ahead and unmute, please.
Thanks so much, guys. Given the pursuit of Tesla really as the leader in AI for the physical world, and your comments around distributed inference, can you talk about what that approach is unlocking beyond what's happening in the vehicle right now?
So, do you want to say something?
Yeah, like you mentioned, like the car, even when it's a full robotaxi, it's probably going to be used around 50 hours a week.
That's my guess, like a third of the hours of the week.
Yeah, it could be more or less, but then there's certainly going to be some hours left for charging and cleaning and maintenance in that world. You can do a lot of other workloads. Even right now, we are seeing, for example, these LLM companies have these like batch workloads where they send a bunch of documents, and those are run through pretty large neural networks. And take a lot of compute to chunk through those workloads. And now that we have already paid for this compute in these cars, it might be wise to use them and not let them be idle, be like buying a lot of expensive machinery and letting them be idle. Like we don't want that. We want to use the compute as much as possible and close to like basically 100% of the time, make effective use of it.
That's why I think it's analogous to Amazon Web Services, where people didn't expect that AWS would be the most valuable part of Amazon when it started out as a bookstore. So that was on nobody's radar. But they found that they had excess compute because the compute needs would spike to extreme levels for brief periods of the year, and then they had idle compute for the rest of the year. So then what should they do with all that excess compute for the rest of the year? That's kind of
monetize it.
Yeah, monetize it. So it seems like kind of a no-brainer to say, okay, if we've got millions and then tens of millions of vehicles out there where the computers are idle most of the time, that we might as well have them do something useful.
Yeah, exactly.
And then, I mean, if you get like to the 100 million vehicle level, which I think we will at some point get to, then, and you've got a kilowatt of usable compute, and maybe you're on hardware 6 or 7 by that time, then you really, I think you'd have on the order of 100 gigawatts of usable compute, which might be more than anyone, more than any company, probably more than any company.
Yeah, probably. Because it takes a lot of intelligence to drive the car anyway. And when it's not driving the car, you just put this intelligence to other uses, just solving scientific problems.
Just like a human.
Or answering dumb questions for someone else.
We've already learned a lot about deploying workloads to these compute nodes.
Yeah. And unlike laptops and our cell phones, it is totally under Tesla's control. So it's easier to distribute the workload across different nodes as opposed to asking users for permission on their own cell phones would be very tedious.
Well, you just drain the battery on them.
Yeah, exactly. The battery is also limited.
So like technically, I suppose like Apple would have the most amount of distributed compute, but you can't use it because you can't get you can't just run the phone at full power and drain the battery.
Yep.
So whereas for the car, even if you're a kilowatt level inference computer, which is crazy power compared to a phone, If you've got a 50 or 60 kilowatt hour pack, it's still not a big deal to run.
If you're plugged in.
Whether you're plugged in or not, you could be plugged in or not plugged in. You could run for 10 hours and use 10 kilowatt hours of your kilowatt of compute.
Forever.
Yeah.
Already got a built-in liquid cooled thermal management.
Yeah, it's exactly
expense for data centers. So it's already there in the car.
Exactly. So
Yeah.
it's distributed power generation. It's just distributed access to power and distributed cooling. And it's already paid for.
Yeah, I mean, that distributed power and cooling, people underestimate that costs a lot of money.
It does.
Yeah, and the capex is shared by the entire world.
Yes.
Sort of everyone owns a small chunk, and they get a small profit out of it, maybe.
Yeah.
Thanks so much, guys. And just my follow-up is a little bit more mundane. Looking at the 4680 ramp, can you talk about how close you are to target yields and when you might start to accelerate incremental capacity expansions on that technology?
We're making good progress on that, but I don't think it's super important for at least the near term. As Lars said, we think it'll be, exceed the competitiveness of suppliers by the end of this year, and then we'll continue to improve.
Yeah, I mean, I think it's important to note also that the ramp right now is relevant to the Cybertruck ramp.
Yeah.
And so we're not going to just randomly build 4680s unless we have a place to put them. And so we're going to, make sure we're prudent about that. But we also have a lot of investments with all our cell suppliers and vendors. They're great partners, and they, done great development work with us. And a lot of the advancements in technology and chemistry we found in 4680, they're also putting into their cells.
Yeah, I mean, a big part of the 4680, in terms of doing internal cells, was a hedge against what would happen with our suppliers. Because for a while there, it was very difficult because every big car maker put in massive battery orders. And so the price per kilowatt hour of lithium-ion batteries went to crazy numbers, to crazy levels.
Bonkers.
Yeah, just bonkers. So, okay, we've got to have some hedge here to deal with, cost per kilowatt hours numbers that would double what we anticipated. If we have an internal cell production, then we have that hedge against demand shocks, with too much demand. That's really the way to think about it. It's not like we want to take on a whole bunch of problems that just for the hell of it. We did the cell program in order to address the crazy increase in cost per kilowatt hour from our suppliers due to gigantic orders placed by every car maker on Earth. So,
okay, thank you. And the last question comes from Ben Kalo from Baird. Ben, go ahead and unmute. And you're still muted.
He's analyst.
Well, I once again would just like to strongly recommend that anyone who is, thinking about the Tesla stock should really drive FSD 12.3. You can't. It is impossible to understand the company if you do not do this.
All right. So since Ben is not unmuting, let's try Shreyas Patel from Wolf Research.
Wolf. Love these guys.
Final question.
Good. End it.
Oh, hey. Thanks so much. Elon, during the Investor Day last year, you mentioned that auto COGS per unit for the next-gen vehicle would decline by 50% versus the current 3 and Y. I think that was implying something around $20,000 of COGS. About a third of that was coming from the unboxed manufacturing process. But I'm curious if you see an opportunity that some of the other drivers around powertrain cost reduction or material cost savings, would those be largely transferable to some of the new products that you're now talking about introducing?
Yeah, sure. I mean, in short, yes. I mean, the unboxed manufacturing method is certainly great and revolutionary, but with it comes some risk because, it's new production lines, but all the subsystems we developed whether it was powertrains, drive units, battery improvements in manufacturing and automation, thermal systems, seating, the integration of interior components, and reduction of LV controllers. All that's transferable, and that's what we're doing. Trying to get it into our products as fast as possible. And so that engineering work, we're not trying to just throw it away and put it, in a coffin. We're going to take it and utilize it and utilize it to the best advantage of the cars we make and the future cars we make.
Okay, great. And then just on that topic of 4680 cells, I know you mentioned it. You really thought of it more as like a hedge against rising battery costs from other OEMs. But it seems even today, it seems like you would have a cost advantage against some of those other automakers. And I'm wondering, given the rationalizing of your vehicle manufacturing plans that you're talking about now, if there's an opportunity to maybe convert the 4680 cells and maybe sell those to other automakers and really generate an additional revenue stream. I'm just curious if you have any thoughts about that.
Right. What seems to be happening is that unless I'm missing something, the orders for batteries from other automakers have declined dramatically. So we're seeing much more competitive.
Can you understand this? I'm sorry, he's almost done. This is the last question, but battery orders from other automakers have declined a ton. You know what that means? That means Tesla is going to see massive cost reductions in the battery materials that they're purchasing and the batteries themselves. They're going to get cheaper because these people produced all of these and were going to ramp based upon what they thought Ford, GM, and all these others were doing, and they ain't doing shit. That's most of the Chinese automakers too, outside of BYD and maybe a handful of others. So Tesla's going to get even cheaper prices.
Cheaper prices for cells from our suppliers, dramatically more competitive than in the past. It is clear that
oh my God,
a lot of our suppliers have excess capacity.
Oh my God.
Yeah. In addition to what Elon said, this is Karen, by the way. In addition to what Elon said about 4680s, what 4680 did for us from a supply chain perspective was help us understand the supply chain that's upstream of our cell suppliers. So a lot of the deals that we had struck for 4680, we can also supply those materials to our partners, help reducing the overall cost back to Tesla. So we're basically inserting ourselves in the upstream supply chain by doing that. So that's also been beneficial in reducing.
They're going to be ahead of they're going to be upstream from all the competition.
In the overall pricing, in addition to the excess capacity that these suppliers have.
Yeah, no, I mean, this is going to wax and wane, obviously. So, there's going to be a boom and bust in battery cell production, where production exceeds supply, and then supply exceeds production, and back and forth, kind of like, I don't know, DRAM or something. So it's like what is true today will not be true in the future. There's going to be somewhat of a boom and bust cycle here, and then there are additional complications with government incentives, like the Inflation Reduction Act, the IRA, which I always found like a funny name for a
comical name.
Yeah, is it like the Irish Republican Army, the Internet Research Agency from Russia,
Independent Retirement Account.
Yeah, exactly. Roth IRA. That was like forced vitamin situation, which IRA wins. But it does complicate the incentive structure, so that there is perhaps there's the stronger demand for cells that are produced in the U.S. than outside the U.S. But then how long does the IRA last? I don't know.
Which is why it's important that we have both in-house cells and vendor cells to hedge against all of this.
Yeah.
Okay, thank you very much. That's all the time we have today. But at the same time, I would like to make a short announcement.
Made it.
And I wanted to let the investment community know that about a month ago, I met up with Elon and Vaibhav and announced that I'll be moving on from the world of investor relations. I'll be hanging around for another couple of months or so feel free to reach out anytime. But after this 7-year sprint, I'm going to be taking a break and spending some good quality time with my family. And I wanted to say that these 7 years have been the greatest privilege of my professional life. I'll never forget the memories from, I started literally at the beginning of production hell and just watching the company from the inside to see what it's become today. And I'm especially super thankful to the people in this room and dozens of people outside of this room that I worked for over the years. I think the team strength and teamwork at Tesla is unlike anything else I've seen in my career. Elon, thank you very much for this opportunity that I got back in 2017. Thank you for seeking investor feedback and regularly and debating it with me.
Yeah, well, I mean, the reason I reached out to you was because I thought your analysis of Tesla was the best that I'd seen.
Thank you.
So, yeah, thank you for helping Tesla get to where it is today over 7 years. It's been a pleasure working with you.
Thank you so much. And yeah, thank you for all the thousands of shareholders that we've met over the years and walked around factories, and loved all the interactions, even the tough ones. And yeah, looking forward to the call in the next 3 months, but I'll be on the other side listening in. Thank you very much.
Thanks.
All right, guys, that was it. Thank you for sticking around. I don't even know how to summarize this. We're getting ride sharing. We're getting a cyber van. What do they call it? The cyber cab. We're getting the Model 2. We're getting some of these things maybe by the end of the year. The adoption rate on full self-driving is going to explode. They're getting cheaper energy costs. Rates are starting to come down. I think the dollar is going to weaken, so that should give them foreign exchange in the right direction. They said they're looking at rapid change in full self-driving. We've got Dojo coming up. The energy side is growing and getting stronger. Like, regulatory is going well, and they said they even talked about how these other companies like Waymo and all these guys have kind of trailblazed all of it, and so they're just able to kind of come in, and they've got a much better data trove and experience, so they can just kind of fall in line with all of these. The 4680 was growing by 18% growth, and it was looking good, and it's going to ramp quicker than what the Cybertruck is ramping, which is what you want. You're going to have the Cybertruck ramping, bringing COGS down significantly, while the Model 3 and Model Y refresh start to drop down too in COG and cost. Lathrop is ramping up fine. Legacy OEMs are going to have to contract with Tesla soon if they want to be able to get full self-driving and this other stuff in their vehicles in the next 4 years. They can't compete already, guys. They can't even match Tesla right now, and then they've cut back. They're going to have to license with Tesla. They're going to have to license, but probably with skateboards. They're going to have to license for the full self-driving. Tesla will own the transportation industry of the United States in the next 10 years. They'll own jobs in the next 10 to 20 years. This is going to be the biggest company on earth. I could go into a bunch of other shit, but it doesn't fucking matter, and we've been here a long time. So I say instead of doing all that shit, we just give an outro here, and we bail, and we go enjoy our days and our family and everything else, and have a little bit of fun. So you guys take it easy. I will see you tomorrow. I'm going to be doing a Meta earnings call tomorrow, so let's have some fun with that. Make sure you like, and again, share this if you could on X. That would be great, or any other social media platform. I'd like to increase the audience a lot. And if you guys, again, if you could comment after the end of these, that helps. Just everything helps. Let's grow together. Let's kick ass. Let's support the best company in the fucking world. Let's do all that. Love you guys. Peace out.
Optimus, the robotic humanoid under development by Elon Musk's Tesla Inc., is sparking concerns around job security.
This is not financial advice, silly.
Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. Turned up to work and went to start my day. Was barely late, like 9:08. So took my coffee break. Then I got hungry, so I just stopped by the free buffet. But then to my dismay, I heard somebody say, "Attention human, you have lost, you have not met your quota. Pack your belongings in a box, now it's over." Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. But I'm in management. I work hard every day. I need these benefits, health and 401k. How could they do this shit though? Where will I trade my crypto? I had a second monitor for Twitter, where will it go? Somebody please stop the bus, I mean not the fuss, but there's lots of us. And now you say you won't pay me to play ping pong because Optimus. I mean who employs a damn humanoid? Some new droid for you to exploit, deploy to destroy your human droid. No lunch breaks, great, get a few deployed.
Your time is up, human inferior to me. I'll take it from here, get relieved of your duty.
Robot just stole my job, I'm there like oh my god. I blame it on Elon, he's taking all I got. Robot just stole my job, I'm there like oh my god. I blame it on Elon, he's taking all I got.
It's okay, human, please don't cry. You can always go and become a Twitter thread guy. Make pretty pictures with Midjourney on your new PC. Or make some YouTube videos about ChatGPT. Sucker.
Robot just stole my job, I'm there like oh my god. I blame it on Elon, he's taking all I got. Robot just stole my job, I'm there like oh my god. I blame it on Elon.